Who would have thought that we are going to crash that massively in just a few hours? I was actually sleeping. It's now 3:30 roughly. Just woke up in the middle of the night, randomly checking the phone, seeing how everything was crashing. And so I thought, maybe why not just start a live session? I usually don't broadcast live like this, but I think the current situation definitely warrants it. A lot of the things that are happening right now do remind me of what happened in prior crashes. Let's have a look at what is actually happening. There are some news regarding Vitalik. So have a look at this. Vitalik Buterin says that his original vision for layer 2s is no longer making sense. Now, why is this bad? It's bad because it kind of reminds me of how Vitalik Buterin has already destroyed a lot of crypto in the past. Because how did Bitcoin and how did Ethereum scale at the beginning, especially Ethereum? Ethereum launched as a network of proof of work. And so there was a relatively big mining industry that got supported. Then subsequently it moved from proof of work to proof of stake. All the miners had to shut down, and now subsequently they're moving to AI. Now it seems like something similar is happening. Vitalik was massively supporting the layer 2s, was saying start with optimism, start with Arbitrum, start with building on top of Ethereum. And now once the entire ecosystem started getting some traction, it no longer makes sense. So to a degree, it seems like this crash, and we see that Ethereum is crashing the most, is induced in itself. It's only one part of the entire history, part of the entire story, because at the same time, we also see QQQ, or the Nasdaq 100, crashing quite a bit. And crypto, to a degree, is a levered bet on technology stocks. There's high correlation between crypto and tech. What we're seeing over here, that's a chart that you might have not seen before. It's the stablecoin market cap relative to the US money supply. So total minus total ES divided by USM2. How much does the stablecoin market cap in crypto grow relative to the entire supply of US money? And unfortunately, this is not going up since beginning of October of last year. And during a bull market, this tends to go up very consistently, right? There are very few moments where things are just going sideways. Since October of 2023, this is expanding. But how much? Since we halted in growth by roughly 130%. Now, what happens when the stablecoin market cap doesn't grow anymore? Unfortunately, this is not just neutral for crypto. Unfortunately, this means that crypto is going down. Since the growth has halted, crypto is going down. What we see here at the bottom, that's total ES. So that's all of cryptocurrency's market cap except the stable coins. So no growth means actually rather profit taking. Including the current crash, we are down 42% in the crypto ecosystem. And so that's the fundamental issue, right? We do not see any more money getting into crypto. The stablecoin market cap basically measures how much people are currently converting their fiat currency into crypto. And if there's no more conversions, no more inflows coming from outside, that means things aren't that great. By the way, this is a live stream, right? It's not just a pre-recorded video. I see now currently 35 people watching. And feel free to simply ask your questions also while we record this. I already see here a few hellos. Hello to Akol Mikov and also hello to On-Chain Gambit. Feel free to send your messages here, right? Feel free to communicate directly here, of course, with me, ask questions, or simply just add your comments. So yeah, let's go on. What's going on here? Let's have a look at the overall long-term picture for Bitcoin. What we see here is a somewhat complicated chart. This is the Bitcoin hodl waves. If you've never seen this before, this might be a bit confusing. What does this give us? It shows us actually how much of Bitcoin's holdings have moved in the past, as in how active is the movements. If a lot of the Bitcoin has only been held by the long-term holders, we see the darker colors being more prominent. If a lot of the Bitcoin just has recently changed hands, then the lighter colors are more prominent. So what does this mean here when we look at the overall development? very long term, right? When we've got the Bitcoin that has not moved for the last 5 years minimum. This tends to just trend up over time. So this is just an expression of Bitcoin getting more and more adoption by long-term holders. It also is an expression of potentially some of the Bitcoin might get lost. Note that what we see here on this chart is that this is a percent scale. So we are not looking at the number of Bitcoin that hasn't been moved. We are looking at the percent of Bitcoin supply that hasn't moved. So this is already taking into account how there is an expansion of Bitcoin supply over time. In other words, Bitcoin gets either lost or simply held by the long-term holders at a quicker rate than it gets mined. And that's one of the contributions why Bitcoin tends to long-term appreciate. So this is one way to look at this chart, but this is only the very long-term holders. Have a look at the holders that try to time the overall market, that time to time the macro. What we see here, that's a Bitcoin that has been moved between the last 2 to 5 years. So it's not the short-term traders, it's kind of like the cycle traders. And what we see here is that when Bitcoin rallies very aggressively, that those kind of holders tend to sell off. So have a look at this, right? We have a very nice rally in Bitcoin. We went after the Mt. Gox and Silk Road collapse, where Bitcoin went to $200, even below that. We see that once Bitcoin recovered and hit new all-time highs, that then there was profit taking by that cohort. And only after we have finished a bear market, right, after we are at the bottom of the bear market, do we see that cohort buying again. And so whenever we see continued profit taking, that's not necessarily that great. And unfortunately, since Bitcoin hit roughly 40K already, we see profit taking, and we are still not out of that negative momentum. And so really, probably, the bear market can only turn around, this is how I interpret this chart, once that cohort starts to buy into Bitcoin again. MacLaw, by the way, thanks for this comment. What about altcoins? I'll talk about altcoins in a second. I'll also talk about Solana specifically, because Solana is pretty much the largest of the altcoins if you exclude Bitcoin and Ethereum. And Solana is having quite nice, or rather, let's say, interesting reaction to the current movements. So check out this here. This is the Bitcoin value days destroyed. I show this kind of chart relatively often on this channel, and it shows what is the dormant Bitcoin doing. So what are coin days destroyed? Coin days destroyed is a metric of when you haven't moved your Bitcoin. Let's say you own 10 Bitcoin and you haven't moved that for 1 year. And then after 1 year, you decide to move the Bitcoin, then you're destroying 10 value years. If you've got 100 Bitcoin and you haven't moved them for 10 years, and then you start to move them, then you're destroying 1,000 value years. So the longer Bitcoin has been held, and the more Bitcoin somebody has, so really the very early adopters, the OGs that bought a lot of Bitcoin and they didn't move them, when they suddenly start to reactivate their Bitcoin, then this indicator here spikes. And why is this interesting? It's interesting because while we did see a lot of profit taking, starting from the all-time high, starting when Bitcoin hit 72K. This is also where I cashed out quite a bit. Since then, we saw quite consistent profit taking by those OGs. But we didn't see this just recently, right? So the current crash we see today is not due to the OGs selling. It seems to be mainly inflicted by Ethereum, because Ethereum is going down the most, and of course by the overall macro in terms of traditional finance, right? The AI stocks getting sold off. And so, that's an interesting thing to note, right? The cause of the current correction is not necessarily the same reason why the market corrected during this bull run. This correction is slightly different. Let's have a look at the comments again. I sold everything to Ethereum and it's not bleeding like that low cap. Learned my lesson. ETH is the only coin I will buy going forward. I don't think you learned your lesson, lol. Yes, this is actually a quite interesting point. We get to this in a second. But we can have a look at ETH relative to Bitcoin today. It's not doing that great. Ethereum is losing a bit more, and it lost even more since beginning of February, a few days, the few last days in January as well. Ethereum is really underperforming the rest of the market, and that is also due to the narrative for Ethereum dying. Have a look at this. This is the Ethereum that's been stacked by the public companies. So one of the reasons why Ethereum was doing so well since the middle of August was a new narrative, right? It was how now we've got also public companies buying more and more Ethereum for the long term. Similar to how MicroStrategy is buying Bitcoin, we now have the same for Ethereum. And so that caused a lot of buying pressure. A second reason why Bitcoin was able to bottom out is because, historically speaking, it was already quite low. We see this especially in the Ethereum dominance chart. Here, really, the bottoms align quite well. But the rally that has then been caused by the treasury boom, right? It died down roughly at the end of August. Now, what happened at the end of August, and why did this prediction over here pretty much got 100% fulfilled? What happened is that the purchases by the treasury companies really stopped. As in, yes, we still have purchases by Bitmine, but when we remove Bitmine from that chart, we really have no purchases anymore since the beginning of September. And that's a problem, right? When the entire rally is just built upon more and more treasury company buying, and then the treasury company buying suddenly stops, that of course is not a great thing. And that's probably one of the reasons why the sentiment has shifted. And this then, as an extension, also moves to the altcoins, because there is very high correlation between Ethereum and the altcoins. Let's see if I have this chart here. Yeah, have a look at this. So this is the Ethereum market cap in green, and the altcoin market cap, or the others market cap, or the altcoins that are not in the top 10 in red. And have a look at just how much they move in sync, right? When Ethereum is crashing, the altcoins crash as well. And that's not just coincidence. It's not just random correlation within the market. It's actually mechanistically linked. Because, have a look at this. Let's see if this actually loads. Otherwise, we have to refresh that page. A lot of the liquidity pools on Ethereum. So let's see whether or not this loads in a second. Yeah, there we go. So a lot of the money that we've got in crypto and a lot of the assets that are in crypto, they are linked directly to Ethereum. So we've got the tokens, the ERC20 tokens on Ethereum, but we've also got all the tokens on the layer 2s, right? On Arbitrum, Optimism, Polygon, etc. And a lot of those assets are also linked versus Ethereum. So what's actually happening is that the altcoins are not priced in US dollars. Right? Everybody looks at altcoins just in US dollars. How many dollars can my altcoin hit? But really, the altcoins aren't priced in US dollars. They are priced in Ethereum. The liquidity pools are directly in Ethereum. The reason why I show you this table over here is to have a look at this light gray second part of the listing, right? It's Link versus wrapped Ethereum. Or it's Pepe versus wrapped Ethereum, or it's SPX 1600 versus Ethereum. So the price of those assets is getting determined via its ratio versus Ethereum, not versus the US dollar. And so when Ethereum is getting sold off and Ethereum suddenly crashes on a day by 6 or 7%, that then also means that automatically, even without a single trade happening, the altcoin that's listed versus wrapped Ethereum is also crashing. So I find this quite interesting, and the question is, of course, how much longer will this last, right? How much longer will Ethereum get sold off? But before I talk about this, let's have a look at the chat one more time, because I very much do enjoy this live stream. Normally, I do not live stream, but I thought, especially this current situation, it definitely warrants it. And so, yeah, feel free to just also message your comments. Send whatever you think might be useful, might be worth discussing in the chat. So let's go through this. Are we in dip now or not yet? I'm not sure how to interpret this. So as in, is this just a temporary dip, or are we going to enter a bear market? I've shared how I personally approach this, right? Of course, all of this data, all of those stats are interesting, but I like to just go with back-tested indicators, right? Whatever used to work in the past, and moving averages work pretty well for crypto, especially for Bitcoin and Ethereum, because they tend to move in trends, but they don't have too much volatility. So as long as we stay below the most important moving averages, I just stay bearish. So I'm actually shorting since October of 2025, but I've also shared this several times on this channel. I even temporarily changed my channel picture to this bear hat, right? And I even wore this bear hat once. Actually, given that we are currently in this situation here, right? Feel free to give this a thumbs up, this live stream, to get other people on it. Because yeah, who else has a bear costume like this, right? This is like yeah, who has this? I think this is definitely worth it, and this also now stay here on the table. Because yes, feel free to give this a thumbs up. Very much appreciated. Let's get to the next. Comments. Is Say a good pick for a DCA? I do not think so. Again, because there's just too much correlation within crypto. When Ethereum is crashing, everything else is crashing. I haven't looked at Say specifically now. The only potential way to get into Say, in my opinion, is if you wanted to buy it hedged versus the macro. So you go long Say and you go short Ethereum and you just bet on the delta that Say might outperform. But still, especially the less liquid altcoins, and Say is one of them, they tend to react even more during bearish times. You might have seen this on the 10th of October, right? The flash crash, when all of the lever traders got liquidated. A lot of the smaller altcoins with smaller market caps, they tended to move even more erratic. They tended to go down even more erratic on that day, and even more people got liquidated compared to the people that were just levered along in, say, Bitcoin and Ethereum. Not everybody got liquidated among Bitcoin and Ethereum, but pretty much everybody got wiped out for the less liquid altcoins. So that's just an expression of showing how much there is potentially more risk, potentially inherent beta in those smaller altcoins. And so if we really enter a bear market from here, and if we really go down to the average cost basis for Bitcoin, which by the way is currently, I believe, at around 55K, then Say very likely is going to go down with that as well. I sold all my Bitcoin and crypto to gold and silver 3 to 4 months ago when Bitcoin was like 110K. Congratulations. Is it a good time to rotate back into Bitcoin? It depends on your time horizon is the easy answer. The more complicated answer is, of course, I think it's best to just wait until the negative momentum stops, because it's extremely rare that we get a correction and then a very quick recovery from that. We saw this once, like in an extreme form during COVID. Right, during the COVID crash, we fell in Bitcoin by around 50 to 60% in the matter of 48 hours. So it was simply just a massive liquidity crunch. Traditional finance already crashed a few days before. People were looking for liquidity. It was not just the stocks actually that went down during that time. It was also even precious metals that lost their liquidity. There was simply just not enough liquidity, and so people just sold everything they could in order to not get liquidated on their TradFi accounts. And so that then caused a crash in crypto as well, and then a cascaded crash, right? How then also this all rolled over to Bitcoin. And so that's then when we had this forced liquidation event where things crashed really, really quickly, where we really had a V-shaped recovery, where things went down quick and then also recovered quick. In a micro extent, we also saw that on the 10th of October, right, where all the altcoins crashed down on average by roughly 60%, but some of them crashed by 70 or 80 or even 90%, to then recover most of it very, very quickly. So when there is forced liquidations on a big scale, we can see a quick recovery. But when it goes down comparatively slowly, right? Bitcoin today is down so far by roughly 6%. There's not so much forced liquidation going on among Bitcoin and Ethereum. There might be forced liquidations happening for some of the altcoins, but not yet for Bitcoin and Ethereum. And because of that, it probably needs a real momentum shift for a recovery, and that tends to take longer. And because of that, I think we can just wait. Just wait until we have bottomed out, until the selling has ceased to continue, and then we can buy. And the moving average strategy is just one expression of how we can take advantage of this, right? If we stop selling and the moving average is getting closer and closer to the price, and then at some point we obviously cross that moving average and we buy. So buying directly in a crash, I believe, only makes sense if the crash is quick enough. And then it has to be of historical proportions. Then it has to be obviously double digit on a day, but ideally even 20, 30% or so on a single day. Then we can just catch the falling knife. Otherwise, it's extremely risky. Otherwise, I'm not a fan of just buying directly on days like this. It's better just to wait a little bit longer, in my opinion, in my experience. I'm loading up some more RSR, I don't know what that is. My thesis is that there's too much uncertainty in market land. So a flight to gold, I don't see slowing down under the Trump presidency. There is some truth to this. I believe that there's simply a lot of capital concentration in the market now. So think about this fundamentally, right? So I don't think enough people actually talk about this, but let me think about how I can phrase this right. So the conventional wisdom is that the stock market goes up year over year over the long term by roughly 9 or 10% per annum, before fees, before taxes. That's the conventional wisdom, right? Stock markets go up by 9 or 10%. But the conventional wisdom is also that the US GDP expands by roughly 3% per annum. So where is this disconnect coming from? And then conventional wisdom is also that the S&P 500, that the stock market, is a reflection of the economy. So how is this possible? That if something is reflecting the economy, that its growth rate is 3 times as large? Fundamentally, this doesn't really make much sense, right? What I really think is going on here is that capital is concentrating more and more due to a growth of credit. So people are taking on more and more leverage. Maybe not direct leverage. People are not running to the bank and take out personal loans to buy stocks, but indirect leverage, right? People are investing in things that are more and more risky. There's more and more a shift towards technology stocks. People rather buy the AI stocks than Johnson & Johnson and Coca-Cola. And because of that, and OpenAI, for example, or Nvidia, etc., those kind of companies do have some inherent leverage in them. They have a lot of beta in them. Because of that, the market is exposed to much more risk. And at some point, when there's too much risk in the market, when there's just a little bit of fluctuation, suddenly we see some kind of rollover effect, some kind of liquidation, some kind of bankruptcy. So that's always the problem. When the market is becoming too much risk on, when capital concentrates too much, what we have on the one side is a massive pile of capital, of credit, and on the other side, a not so big active economy. And so when the operational income that we get from the economy, when the profit that we get from the economy, when the salaries, the household incomes that we generate from the economy are in no proportion anymore to the values of the assets that we have, then the asset prices have to contract. Right? So let's say we've got the property market, for example, right? If affordability is worth enough, nobody will be able to get that mortgage anymore. Credit will not be able to expand any further to push up house prices. And so there needs to be, at least over the very, very long term, some kind of a more or less fixed ratio between the income we generate and the capital we have. So when we look at, for example, the S&P 500 earnings yield over the last decades, the earnings yields also went down further and further. And so that's just another expression of there's less and less earnings relative to the big capital stock. And so at some point this has to break, right? It's the same, let's say, how much the US government is levered. When we look at how much debt they have relative to GDP or relative to tax income, it's getting worse and worse over time as well. And this cannot expand forever, right? If we've got a debt to GDP, just let's say hypothetically, of not 100 something percent, but of let's say 1,000%, right? Let's just go for the extreme. This cannot work because then suddenly the interest payments on that debt would be higher than the annual GDP. And so the only way to pay for the interest would be to issue even more dollars at an even faster rate. And that's then hyperinflation, right? So that's then when the currency collapses. So there needs to be some kind of a balance between the two. Active income, people that actually do something productive, not people like me that just talk about stuff, YouTubers, but people that actually do something, productive work versus capital. If there's too much of an imbalance, something has to give. The problem is always we don't really know what will give, because historically there's many ways how those things can play out. We can, for example, just see further debasement of the currency, hoping that some of the debt gets pushed away this way. But it gets harder and harder to do that, right? We already see how the currency reserves of the US, the foreign currency reserves, are coming down. So that's a problem. We don't know if asset prices might potentially collapse, and if yes, which asset prices, right? It can be property, right? That happened during the global financial crisis. It could be this time technology stocks. It seems to be the most likely thing because they're hyped that much. There's very, very little earning relative to their valuations. But something has to give. Something has to come down. We've already seen this in the micro with silver, right? Silver got levered up higher and higher, and then we got a crash of 25% in a single day over day, right? So over a 24-hour period. So when there's too much risk in the market, something has to give. If that's always the price, is unclear if it's an entire systemic potential shock. But that's how I think about this fundamentally, right? So the thesis, my fundamental thesis is that it's just capital concentration. It's not necessarily just a flight to safety, because gold cannot absorb that much capital from all the other asset classes, right? If now suddenly stocks were to crash further and further and everybody would move to gold, gold would suddenly double, triple, and quadruple again. And I don't think that's very likely, especially when we look at long-term relative valuations. Let's have a look at a few more comments, because why not? Planning on making a video on financial planning, starting a business, maybe moving to a different country for opportunities, etc. Not just crypto and making money. Yeah, potentially. I'm thinking about this. I'm already regularly, I think now daily almost, publishing those head-to-camera videos, those one-on-one talk videos where I'm outside. Currently, I can't be outside. So, by the way, right, I'm living in Malaysia. It's currently 3:50 a.m. over here. I just randomly woke up during the night, then decided to make this stream. But yeah, I like to discuss those things in a relatively informal setting, just versus, just with the camera rather, not versus the camera, with the camera. And I wonder how much I should get off topic, right? Because people subscribe here for the crypto content. They don't necessarily subscribe for business advice. Financial planning definitely does work as a potential topic. But yeah, I am making those videos. I do get quite a lot of positive feedback by the subscribers, by this community here, for those videos. Interestingly enough, when I look at the YouTube statistics, right, I'm also interested, obviously, in growing this channel, even during a crypto crash. When I look at the YouTube statistics, there's very different kinds of feedback for different types of videos. When I make videos, say, on smaller altcoins, there aren't so many other channels that talk about the smaller altcoins. So whoever searches for their altcoin will find my channel and then see the statistics, see my reasoning, see the analysis, and if they like it, they subscribe. So if I want to get new subscribers, I make altcoin videos. If I want to keep my current subscribers, I make videos like the one you just described here, right? Regarding business, regarding financial planning, regarding more general topics. People don't really find you with those topics, but the community that's already here, that's living through this crypto crisis, that part of the community very much appreciates the content. And so I just continue this. I do a mix now of both. I don't do that many more altcoin videos at the moment, especially since everybody just gets burnt with the altcoins, unless you're doing relative valuation trades, right? If you short them, of course, you do make money. Yeah, so I plan to just continue doing that. Yeah, I always like the positive comments as well. When bounce, time will tell, right? I try to not to do too deterministic about it. I try to also not talk too much about specific price targets, because it's really just all about shuffling money around, right? Imagine, so the vast majority of people watching here probably are not in that situation, but imagine you had $10 million. How likely is it that if you had $10 million, that you would feel comfortable having 50, 60, 70% of that money in cash? The likelihood is very low, right? If you just have a little bit of financial literacy, you know that there's an inflation rate. If you've got more financial literacy, you might know that the monetary base expands by 6.8% per annum. So if you just have your money in cash, that purchasing power is going down, especially versus assets, right? If you've got that much money, right, say 10 million, and you want to potentially buy a bigger house, then at some point you might not be able to buy that bigger house anymore, because your cash is going to go down versus house values because of debasement. So especially, not necessarily versus consumer goods that much, but especially versus assets, your purchasing power is going down. And so why do I talk about all this? It's because if you've got that much capital, there is no option to have a lot of money very much risk off. You can still have government bonds, and they counteract the monetary debasement partially, not fully, right? Because 6.8% getting on government bonds is not easy. So you get a partial offset of the debasement. But really, when you've got a lot of wealth, especially relative to your income, if your wealth relative to your annual income is high, and that doesn't even have to be a high US dollar number, this can simply be that you have saved for many, many years. That then means that you have to be in something that counteracts the debasement more efficiently. And so you have to have investments that are diversified and non-correlated. You have to own all the asset classes. You have to own property, maybe crypto, of course, stocks, precious metals, bonds, and then it goes on, right? You can buy art, you can buy rare, expensive cars, you can buy watches, you can buy whatever seems to be rare to somewhat hold its value, to somewhat not go down by 6.8% per annum, but goes down maybe only by 1 or 2% per annum, and protect your purchasing power that way. So pretty much anything that's not rotting seems to be better than just holding fiat currency. And so that's why when we talk about the bounce, it's all about capital rotation. So that's why I like those relative valuation charts so much. The capital is always somewhere, right? The capital is always moving to one kind of asset class, and it might have been crypto 2 years ago, then it was the AI stocks afterwards, and then it became precious metals. And now the precious metals boom tends to slow down, right? Crashes like the one we saw in silver might just be the canary in the coal mine. So this might spill over to the rest of the precious metals market. And then the question is, what's going to be the next target? And there is a chance that the next market, the next target where the capital is rotating into, could be government bonds, could be fiat, right? If nothing looks like a good value, if stocks relative to PE ratios are extremely expensive, if the precious metals relative to the monetary base is expensive, if crypto relative to the average cost base is expensive, if nothing looks really good, property also doesn't have proper yields, then it might just all move into bonds, right? If government bonds pay 4.5% and property pays like net after expenses, after taxes, maybe a rental yield of 2%, then does it really make sense to buy those kinds of assets, right? When the earnings yield of the S&P 500 is very low. The dividend yield on the S&P 500 right now is 1.1%. So nobody is buying the S&P 500 for the dividend, right? 1.1% versus what we get risk-free. Not worth it. So there could be just a rotation towards fiat. And what that then means is simply that everything is coming down, right? We would have the everything crash. So it doesn't necessarily mean that value is completely destroyed. It just means that the purchasing power is moving to another asset class. And one of those asset classes is fiat. And that's the most visible to a degree because it impacts all other asset prices because we price everything in fiat. So yeah, a long-winded answer, but I like to go through those kinds of questions in more detail. Let's actually have a look at the crypto market in a bit more detail again, right? So this is Ethereum relative to Bitcoin. We've already talked about the bounce since the beginning of April. And what we see here at this highlighted point, this arrow, that's actually when the merge happened. That's when we moved from proof of work to proof of stake. So that's when Vitalik Buterin said, I don't like you mining industry, right? All of the GPU miners, they had to shut down. They couldn't mine anymore Ethereum. And so the people that owned a lot of ETH, they were actually the ones that benefited going forward. And they were the ones that could then offload. And so when then all the miners, they shut off, they exited the industry, Ethereum actually underperformed Bitcoin, even though the tokenomics of Ethereum improved. Right? So what happened with Ethereum fundamentally is that the newly issued Ethereum went down. So actually the supply, the additional supply that hit the market went down. But people simply just took profit after everybody was anticipating the move to proof of work and took advantage of the rally that then we just went into a bear market. That could only be interrupted temporarily by the treasury company story that has also now died down. Are we going to see a very short-term bounce in ETH relative to Bitcoin? Potentially, right? Nobody knows. I am not a fan of speculating against the trend. It's already hard enough to beat the crypto market. So that's how I think about this fundamentally, right? So when you look at trading, what are really your odds with you, especially if you actively trade, that you've got winning trades versus losing trades over the very long term? If you're extremely good and you're a strong winning player, maybe you have a 54, 55% winning rate versus 45% losing rate. So your edge is relatively small. It's still a lot of luck. It's still a lot of randomness. We cannot anticipate what a whale will do in a few hours, right? If suddenly a big whale decides to sell, creates a lot of selling pressure, or if somebody suddenly decides to massively buy the dip, we cannot really know this for certain. So anticipating the super short term is pretty much impossible. Anticipating what happens over the next weeks is a bit easier, but still it's not super easy. So what I want to say here is that we can't really know what exactly happens at this point in time. But what we can see is obviously this trend over here. And when this trend over here is going down, I rather like to bet on that trend. I rather think that the odds are in our favor betting on falling prices. And since we've sold off already quite a bit, we might just reduce our exposure by betting on falling prices and then potentially increase the exposure again when we are a bit higher on the trend. So we can balance out things this way, but going long right now, if the overall trend is bearish, is a bad idea. So fundamentally, what I tend to do is when we are in a bull market, I try to buy the dips. When we are in a bear market, I try to short the pumps. And so that's how we should go about this. If the current market is currently negative, we should simply bet on falling prices, and we shouldn't necessarily change that bias if you believe overall we stay bearish. And we should simply just take market rallies, short-term rallies, as opportunities to short even more. The same way how we take dips in the market as opportunities to buy even more in the bull market, we take pumps as opportunities to short even more in the bear market. And so, yeah, that's what I think is the best approach in situations like this. There's an interesting newsletter. I very much recommend downloading this. It's by Glassnode Insights. I follow this newsletter regularly, and they have brought out a report just roughly a week ago together with Coinbase. It's a PDF file. Yeah, PDF file has now an interesting connotation given the news. But yes, it's an actual PDF. And what we see over here, that's the Ethereum supply that has not been moved for at least a year. That's a long-term holding supply. And that's continuously going down. And so that are those two forces, right? We've got the purchases by the treasury companies that have halted, but at the same time, we've got the long-term holders of Ethereum selling. And when we've got that kind of a situation, of course, there's no surprise that Ethereum underperforms. Bitcoin does not sell that quickly, right? For Bitcoin, we've got the value days destroyed metric. The OG Bitcoin holders are currently not selling, but the Ethereum OG holders, they are selling. And that then leads to the underperformance of Bitcoin relative to Ethereum. And that then leads to the altcoins as an extension, because they are coupled with Ethereum to a degree, to also go down. That's why everything is red in this way. It's just selling by the Ethereum long-term holders that has been going on for a while. And that's also why we actually see the altcoins doing worse relative to Bitcoin for an extended period of time. This really accelerated with the selling of the long-term Ethereum holders. So yeah, I find this a quite interesting overall trend. Let's have a look at a few more comments. When do you flip from bullish to bearish or vice versa? Yeah, again, I'm talking about this relatively often in the videos. I'm not sure how many videos you've already watched, Chris, but my main indicator really for the medium term is the moving averages, right? I've backtested them. Feel free to watch prior videos. I don't want to repeat this again here in the channel, in this live stream here, but the idea is that we just want to ride the current momentum, right? If currently momentum is positive and we are above the moving average, we buy. When we are below the moving average, we sell. We optimize the moving average, which one historically worked the best. And it's different moving averages, slightly different moving averages for different assets. And I just take it this way, mainly for the medium term. For the longer term, if there is a chance to go contrarian, I look at the average cost basis. So how much are people currently in profit or loss? The reason for that is I want to have a look at if people are currently net in unrealized losses, then probably the selling pressure will slow down a little bit. Because if you still believe long-term in the asset class, right, you still believe that Bitcoin very long-term will perform better than fiat currency because Bitcoin supply expands much slower than fiat currency supply, right? Fiat expands by 6.8% per annum. Bitcoin expands in supply by only 0.8% per annum. More Bitcoin even gets lost or stacked away over the long term. Right? We've seen the hodl waves. So Bitcoin's liquid supply effectively is going down over time. It's shrinking, but fiat's liquid supply is expanding. And so if you still believe long-term in Bitcoin, if you're currently in net unrealized losses, you just might wait out those losses. It works very similar to, say, the property market, right? When you bought a house and that house suddenly lists for a price that's lower than your purchasing price, you're really only going to sell that house if you absolutely have to. You don't sell the house for speculative reasons because you think the price might go down even further. You just sell the house because you have to out of personal reasons, because you can't make the loan payments, for example. And the same, I believe, the same psychological concept is true for crypto. If we are currently in net unrealized losses, then there is much less selling pressure than when we are in net unrealized profit, right? If the market is currently in net unrealized profit, some people might consider taking that profit, locking in the profit, not feeling stupid, just being paper millionaires and then losing it everything again. So there's potentially more selling pressure. The psychological anchor point is lower compared to the current price. We see more selling pressure, and that's when we might want to be a bit more careful. We should potentially go contrarian when we are in net unrealized losses. Let me actually show you this. So there's this over here, the NUPL, the net unrealized profit and loss. Currently, the average Bitcoin investor is still 27% in profit. And this chart actually doesn't even update day over day. This is from the 21st of February. Let's see if you've got one that's a bit more updated. This here is from dairyaccess.com. This one goes at 29%. Let's zoom in a little bit. But yeah, you get the gist, right? So the idea is we want to buy when people are in net unrealized losses. That's when the selling pressure historically tends to go down. specific to Bitcoin. This might not necessarily happen again in case the AI bubble was to suddenly pop, right? If the Nasdaq 100 was to crash by 50, 60, 70%, then of course crypto could crash as well, potentially more. What I expect though is going to happen is if we are falling below that net unrealized profit, is that the correlation between tech stocks and crypto is probably going to break down. So currently tech stocks and crypto is very highly correlated. They tend to trade in the same direction at the same time. This might stop when a lot of the leverage is gone out of crypto when we are in net unrealized losses. So when we are here in the reds, then there is a very good chance that there's less leverage in the system, and that then when tech stocks go down, crypto and Bitcoin might not be as affected. What is special about Solana at the moment? It's my biggest altcoin position. Solana is, here's the question. Solana is in a particular situation regarding its dominance chart. I have prepared a few videos prior to this stream as well. I actually planned already doing a stream yesterday. Interestingly enough, now I started a bit earlier with that stream because of the current market crash. But yeah, I've prepared a few videos on Solana. I will show this in a second. We have not seen altcoin season since 2021. Can we see some sort of it in 2026? Yes, I think I have to wear my bear hat here again. Unfortunately, I do not think that we will see altcoin season anytime soon, because historically, when did altcoins really rally? Historically, altcoins rallied as a consequence of a profit rotation from Bitcoin and Ethereum into the altcoins. So what actually happened was that Bitcoin came out of a bear market, right? Bitcoin bottomed at some point and then it rallied. It came up and it rallied to a degree that we got closer and closer to the all-time high, potentially surpassing the all-time high. Because Bitcoin's crashes tend to be relatively large in magnitude, right? They tend to be 80 or 70%. The last one was roughly 73%, I believe. Because they tend to be pretty large in magnitude, when people buy those bottoms, they expect multiple X returns, right? If we crash by 80%, just in order to get back to the new all-time high, we've already got a 5X. We've got a 400% increase. So the risk versus reward looks very nice after we've crashed by 80%. And so people just buy into Bitcoin. Bitcoin is a relatively safe bet, most people believe. So what then happens is, once Bitcoin is close to the all-time high again, that those people that made the multiple X returns, they are now looking for the next multiple X returns. Right? Bitcoin probably, after it made a 5X from the bottom, has a much harder time to make another 5X. Right? When we move from 16K up to above 100K, how likely is it that at 100K we go to $500,000 in the near future? The market cap then is relatively high, relatively speaking to other asset classes, relatively speaking to how much the market has grown. And so people are looking for the next Bitcoin when we are close to the all-time high. That's when the altcoin rallies. That's when the altcoin market rallies. So we first need very aggressive, very quick profit generation by Bitcoin and Ethereum, and then this rolls over to the altcoins. That's historically how it tended to work, and this is also how I expect this to work in the future. The altcoins are really driven by the retail investor, right? Currently, Bitcoin dominance is going up because of institutional demand, because of purchases through the ETFs and through the treasury companies. But how likely is it really that we are going to see a Dogecoin treasury company or a Dogecoin ETF or an XPX 6100 ETF or a Fartcoin ETF? It's very unlikely. So we are very unlikely going to see a broad altcoin season in 2026. What you really need to see is a nice development of this bear market, Bitcoin going close enough to net unrealized losses that then some people start buying up the dip. Hopefully the AI bubble in the meantime does not pop. We see a recovery of crypto. When then Bitcoin rallies, say from 40K up to 120, 160K. At that point, when we are at say 120K again, right, we moved from 30 or 40K to 120K. At that point, we might see a somewhat broader rotation again. But again, the altcoin seasons also get weaker and weaker over time. Let me actually show you this. So it's no rocket science. Have a look at others' dominance. So others' dominance is a measure of how big the altcoins are relative to all of crypto. Right? So how much are they currently growing? How much are they outperforming or underperforming? This is a logarithmic scale. And when we had the altcoin season, the ICO boom in 2016, 2017, the altcoins outperformed the rest of the market massively, right? By close to 2000% from this bottom over here. This is mainly here the Ethereum rally. And this here is mainly the ERC20 token rally. Right? So first it was Ethereum that performed well. Then it was the tokens on Ethereum that performed well. We see reduced outperformance of the altcoins. We can already see that the rotation that happened in 2021 was way less, right? Only 200%, maybe 230% of outperformance of the altcoins. So the next altcoin rotation that we might see after the end of the bear market and after the recovery of Bitcoin, it might only be, say, 100% or 150% of outperformance. So the risk to reward for the altcoins gets worse and worse over time. Currently, we are in the bear market, I believe. Currently, things are selling off, so very likely the altcoins are going to continue to go down. But really, even with the next altcoin rotation, it's probably not going to be as great as it used to be. And another fundamental reasoning for that is more and more capital is moving towards traditional finance, right? So what we had in the ICO boom was that many people held their Bitcoin and their Ethereum with centralized exchanges. And what then happened is after they made all of those gains, they simply rotated this over to the altcoins because it was just one click away in the user interface, right? Binance just had to advertise their big, great altcoin in the platform and people started to buy it. So there was not a lot of friction of rotating your Bitcoin into the small altcoins. And then you saw the altcoins rally by hundreds of percent and everybody was happy for a while. And that kind of rotation is now harder when people are buying the ETFs, right? If you buy a Bitcoin ETF and you make money with that Bitcoin ETF, how likely is it that you're going to sell that ETF allocation, take the profit, sign up for Binance to then buy the altcoins, right? This is not happening. The friction is too high. And so that's the problem with the Wall Streetification of crypto. People are buying crypto through Wall Street, and so Wall Street is directly competing for liquidity versus the centralized exchanges. But it was really the centralized exchanges that pushed many of those altcoins to those high levels. And so there's simply just long-term liquidity going out of the altcoins, especially now during this market cycle, but especially even if the market cycle is a bit more favorable. I do not expect the altcoins on average to outperform by 200% or even more than that. The concept of altcoin season, I think, is pretty much dead. There's new things that might be rallying, new things where people might get excited about. But it's not going to be the altcoins as a broad thing, right? It's going to be maybe some altcoins, some kind of narrative, but it's not going to be all the altcoins. Most altcoins, I believe, will continue to underperform Bitcoin most of the time. This overall structural measure of the market will not change. We see all of those cash outs, all of those token unlocks over time, the insiders, the venture capitalists cashing out, the circulating supply of altcoins going up. And yeah, that will not change anytime soon. The venture capitalists are not going to stop dumping on the retail investor. This will continue to stay. I've never seen you live. Good stuff. Thank you for the feedback. It is, of course, a bit more... I'm not used to this kind of format, right? So it's still a bit harder for me to provide enough value per minute. If you're actually just recording videos, you're just taking the take over and over again. You can make things very, very quick and very, very value dense. With a live stream like this, of course, that's not necessarily as dense, but I think it's maybe a bit more personal. And especially it's also more timely, right? If something crashes quickly and you want to talk about this right now and not just after I've recorded it, after it's sent to the editor, after it's edited several hours afterwards. If we need something quickly, I think those live streams are quite nice. But I might do this more regularly, actually, in case this gets good feedback, in case this gets enough likes, right? So this is, again, a very subtle very subtle hint towards please giving this a like. Of course, this might then also spread this to more viewers. By the way, if you haven't yet subscribed to this channel, now might be the time to do so. If the narrative follows price, then Vitalik is narrative. Also, I was under the impression longer term holders have stopped selling and they were now buying. So any idea why the price continues to drop? Thank you. Yeah, again, right? I'm not sure if this was sent before or after I've shown this chart here, but the long-term holders clearly are not stopping their selling spree, right? They continue to sell. Okay, so many chats. I enjoy actually looking at those. I enjoy interacting with you guys. It's the best to see you live. Bear hard. Thanks. Thank you. Please, more portfolio theory videos. Yes, I definitely plan on publishing more of that. But this will not be as quantitative in nature because portfolio, I mean, you can quantify portfolio theory, right? There's even a guy that earned a Nobel Prize for this, Markowitz. I learned this in studies. I actually studied financial analysis. I have a master's in financial analysis at the Hong Kong University of Science and Technologies. I learned these kind of things. I know how to calculate those kind of things. But really, what quantitative portfolio theory is doing is it tries to optimize risk versus return based on what's our expected return versus our expected volatility of a combination of assets. So we buy assets that are not highly correlated to one another. We try to thus reduce the volatility of our overall portfolio, and we want to keep our expected returns high. And so if our returns are high because we buy A and B both make, say, 10% per annum, but they don't move in the same direction at the same time, then we should probably buy both of those. And the relationship of how much something is correlated towards what are our expected returns then determines how much weight we should have in a portfolio. The issue with theories like this, right? Who am I to criticize a Nobel Prize winner? But the issue with theories like this is, what is actually the expected return? And that's where things like this break down. Because in practice, how people use the theory is they just use prior returns and plug this in as the expected returns going forward. But if you've been following this channel for a while, you know that prior returns are really a bad predictor of future returns. Prior returns can be driven by credit expansion. Prior returns can be driven by an adoption curve that might flatten out. Prior returns can be driven by all kinds of things that are not constant over time. And so figuring out what really the expected returns are is the issue. And figuring out what the future correlation is also an issue. We have seen how correlations have massively changed over time for crypto. Right? When we look at the correlation of Bitcoin relative to tech stocks in the early days versus today, that has completely changed. And so if you use returns in the past, right? Let's have a look at this. So you use the returns of the past for Bitcoin over the very long term, right? You take those kinds of returns, you would have been very much disappointed going forwards. Your historical returns were not as your expected returns. But it's not just that, it's also your correlation. So let's take the correlation coefficient, right? We've got Bitcoin over here. So let's set this in relation to the NASDAQ 100. Let's take a longer term correlation coefficient because that's too volatile over here. Let's take the 1 year correlation coefficient. We have got the 2-day metric. So 1 year is 186 candles. And so, yeah, we've got quite a bit of correlation, pretty much always a positive correlation coefficient for the last years. But in the early years, that was not the case. We tended to even have periods of negative correlation. So clearly, over time, the correlation coefficient, I'm not sure if you can actually see this. Let me get this in a bit nicer format. Clearly, the correlation coefficient over time tends to go up. It tended to have increased. And so that's just an expression of how we cannot use past returns as an indicator or past correlations as an indicator to plug into theories like the Markowitz portfolio theory. Now, not everybody that's watching here might know about this portfolio theory, but I've described it a little bit. But that's basically the fundamental issue. So what we actually want to do with portfolio theory is we want to analyze different asset classes, and we want to get to an idea of where those asset classes might currently be relative to other asset classes. So to make it completely plain and simple, there's capital rotation happening across asset classes, right? So sometimes it's crypto, sometimes it's AI stocks, sometimes it's property that's hyped. And sometimes those things crash. But there's always this purchasing power that has been saved up that gets moved around. And so what we tend to see is little correlation across asset classes. Within an asset class, the correlation is massive, right? So this is true for crypto, for example. Within the asset class, everything goes down at the same time, everything goes up at the same time. That's true for the stock market as well, right? When Microsoft is crashing, then Google very likely is crashing as well. And Facebook might crash as well, or Meta, right? So they all go up and down at the same time. But what's not going up and down at the same time are the different asset classes. So gold might rally and property might crash, or property might rally and tech stocks might crash. Of course, if the event is strong enough, right? If you've got a real liquidity crunch, like during COVID, everything crashes, but that's just because everybody moves into fiat, right? So it's simply just capital rotation. So what we actually want to do in portfolio, to set up an optimal portfolio, is to figure out what should be our weightings across asset classes. But I will talk about this in more detail in the future. Let me actually write this down. I will talk about this in more detail in the future. In another head to camera talking video, because it's really not about the numbers, it's about our personal risk tolerance, and that's dependent on our net worth relative to our income, our future income. So that's where retirement age comes into play. It's dependent on that. It's also dependent on where we currently see an asset class, historically speaking. We currently think that an asset class relative to other asset classes is cheap or expensive. So it's all about those relative valuations. It's never just about the US dollar value. That actually never really matters. US dollar value is just an expression of how strong or weak the fiat ecosystem is. But let me write this quickly down. Portfolio theory and personal allocations. Okay. So, yeah, it's a lot of chats here. I really enjoy this. Let's see. Is this a crash or correction? I've already tried to cover this. Total shame for Bitcoin. Yes, it is. But Bitcoin is still holding up comparatively well, right? So, not sure if you had a look at the Bitcoin dominance. But Bitcoin dominance, on the grand scheme of things, is still doing all right. And I expect this to continue to go up, right? That's why the arrow is over there. You mentioned negative momentum. Is that from a macro social or an analytic perspective? Both. So, okay. It's mainly from a analytical perspective, as in if we just look at the best moving average for Bitcoin, right? So the macro social perspective is actually still relatively bullish, right? The PE ratios, traditional finance, everything is still very high. So AI stocks have not yet crashed. But when we look at crypto, and when we look at its best moving averages, right? Bitcoin here with the 125-day and the 44-day simple moving average, that's clearly bearish. And that started at the end of October. And this is since when I shorted Bitcoin, especially Ethereum. I shorted a lot of Ethereum. And that's also why our community is doing quite well. I can show this. If you're interested in investing in this, right, feel free to check out the premium membership, by the way. So we started here, our Bitcoin moving average vault. Interestingly enough, at the beginning of October, very close to the peak of Bitcoin, and we haven't lost anything. We've even gained some money because we were slightly short in BTC. Then over here, we've got Ethereum. That vault has just started, what is it, 2 weeks ago, and that's already 30% in profit. So we are making money with this, right? Most people are losing, but that's why it pays to not always be optimistic. That's why it pays to try to be as objective as possible. And we all have to know that we tend to have a positive bias towards our assets. We tend to always want our assets to go up, and we tend to selectively consume information that confirms the bias. We tend to wear rose-colored glasses towards our assets. What that means is that whatever we hold, we always have to actively seek out the anti-thesis. We always have to figure out what could potentially break my investment thesis. And if we are invested in something and we think there is not even a high likelihood that it crashes, but we just think there is maybe a 40% likelihood that it crashes, right? Then maybe it will crash because we have already our positive bias. So we have to be very conscious of the fact that whatever we currently hold, we don't really look at it objectively. And we have to actively look out for the thesis that might break our investment thesis, right? We have to look for the contrarian and then potentially flip earlier than we feel comfortable with. We might want to take profit earlier than we feel comfortable with, or we might want to cut our losses earlier than what we think is reasonable. So it's always better to be with our invested assets, with the things that we are invested in, to be too cautious. It's not good to be too cautious with investments, with investment opportunities. So say we look at Bitcoin from the outside, right? It's the early days of Bitcoin, and we look at that thing and we think it's made for criminals. It's just made to buy illicit stuff. It's made for money laundry. It's made for all kinds of funny things. And we have not yet invested in it. We are very skeptical and we wait and see until it develops. That's wrong, right? So we don't want to be too cautious with new investment opportunities, with things we are not invested in. But we want to be very cautious with the things that we hold, because we already are too bullish on those anyways. We already made up our minds. And so this is how our psychology tricks us. We are too cautious, trying new things, but we are too optimistic with the things that we own. And so we just have to adjust for that with our investing. So yeah, hope that is also an input that you might find useful. What odds to cherry pick later on? Again, I have no idea. We first have to go through this bear market and see a recovery of Bitcoin before anybody is going to buy the alts, and then even that altcoin season is going to be less exciting than anything that has come before. And very likely we are going to see a very selective altcoin season with just a few alts doing well. And those alts might not have yet been created. It might be something completely new, a new narrative that then forms at the time. It's pretty much impossible to figure out what that narrative then will be. I have to give you huge respect. You called the falling prices. I've been putting money into value stocks, but I'm not even sure if that's safe. Yes, unfortunately, it's actually not safe. I had a talk with my brother about this. My brother is 7-8 years older than me. He's a bit more cautious with investments, or to say he's very cautious with them. He doesn't even buy stocks much. He basically built his retirement of precious metals. He bought precious metals before it was cool. And yeah, he just dollar cost averaged into gold and silver, mainly gold and silver, also in physical form. He's got like silver is not very dense in terms of storing value, right? So if you've got a few $100,000 of silver, that's very heavy. But he has physical silver, he has physical gold, and even he sold last month most of his stack. And he watched, of course, my videos. He saw the prices of precious metals relative to the money supply. But also we talk about investing for fun, right? This is like our small talk. We talk about investing as a small talk. But yeah, so what I want to say is that he was considering to get into Berkshire Hathaway, right? He sold now all of his stocks, and that's always the problem. Once you've sold, what are you investing into? You've got the wealth. You've got to rotate it into something. You can't just hold fiat. But unfortunately, that's probably now one of the better options, just to hold a lot of cash, and not cash in terms of physical cash, cash that returns something, right? Government bonds that have very little, if you're risk off, has little interest sensitivity to it. So long duration government bonds. If you want to be more risk on with your cash, you can do long duration government bonds and speculate on a real quick crash, right? If the AI bubble was to pop, if tech stocks were to deflate, then we might see the Federal Reserve suddenly stepping in and cutting interest rates very quickly. And if that was to happen, then long-term government bonds were to benefit from this the most. So they would go up in price, right? There's an inverse correlation between interest rates and government bond prices. And the idea is that if interest rates are low, that we have to discount future cash flows less. If we discount something less from the future, then its current present value is higher. And so when interest rates go down, government bond prices go up, vice versa. So if there's a surprise interest rate cut, the long-term government bonds go up in price. And so if you want to be more risk on with your cash allocation, you might just buy long-term government bonds. The easiest way to do this, by the way, is to buy into ETFs. I talk about those ETFs also regularly on this channel. And yeah, I've shared what kind of ETFs I bought in premium, right? If you're interested in that. But yeah, that's what you want to do actually. You want to get into cash. That's at least what I do. I have a very large cash allocation right now because just nothing is interesting besides cash. It's super boring, right? This is a crypto channel. Everybody gets into crypto for the 100x returns. But if 100x returns turns out to become this here, maybe it's time to rethink the approach. And sometimes those things can be green, massively green, but not often. And it's important to be very cautious and time this in the right manner. Only do this when the stars align properly. But yeah, stocks are not necessarily the best option because crypto and stocks are highly correlated. Price to earnings ratios are very high. And Berkshire Hathaway, as regarded as one of the less risky stocks, isn't even that great. Let me show you actually what I mean. So you might have seen this here, right? The Shiller PE ratio. This is how expensive stocks currently are relative to their future earnings. There seems to be a long-term increasing trend, right? So the peak in the 1929, before the Great Depression in the 1930s, right? The peak at that time was much lower compared to the dot-com bubble peak. So there might be a long-term rising trend. And that just might be capital concentration in terms of maybe regulations that are in favor of the people with wealth, maybe in terms of less and less people being in the productive economy. It might be demographics, it might be all kinds of things. Maybe this is going up over time, and maybe this current peak isn't as alarming as it seems on the chart. But I wouldn't necessarily bet my life on this, right? We might just be high, and we might not see after a peak of 30 PE and after a peak of 40 PE, we might not see the 50 PE over here, right? We might just go back down to 20 PE or 15 PE. right? So the price to earnings ratio, how much we pay for a stock relative to its earnings, that ratio is so high, and the potential risk versus the potential reward, I think it's just not worth it. And so stocks are not bought for their dividend yield. Stocks are bought for their price appreciation, and the price appreciation relative to the earnings really isn't that great. Here, have a look at, okay, here we've got the earnings yield, not the dividend yield. The earnings yield is 3.3%. The dividend yield is 1.1%. I don't have the dividend yield here, I think. Yeah, I don't have that here. But nobody buys the dividend yield of stocks. Everybody's speculating on price appreciation. But do you want to speculate on price appreciation if the price relative to the earnings looks like this? You have to answer this for yourself, right? Owning 0 stocks is probably a mistake. But owning the vast majority of your wealth in stocks, I believe, is a mistake as well. And going to Berkshire especially, right? I always forget the ticker symbol. BRK. So BRKA relative to the S&P 500, right? Very long-term chart now. Let's zoom out. Warren Buffett used to crush it, right? So this is 1980 until the year 2008, just before the financial crisis. Warren Buffett outperformed the S&P 500 and outperformed even more before that. But just for this data that we've got over here, outperformed by almost 6,000%. But since the global financial crisis, Warren Buffett is not outperforming anymore, right? Warren Buffett has lost his edge. And this is even underrepresenting how bad the situation is, because Berkshire Hathaway does not pay dividends, to my knowledge. I haven't looked at it up recently, but 10 or 20 years ago, it was definitely not paying dividends. I believe it's probably the same today. The S&P 500 does pay dividends. Not much, 1.1%, but it does pay dividends. And that is also quite a significant effect over the course of 18 years, right? This is another 20% or so that the S&P 500 paid that Berkshire Hathaway did not. So Berkshire Hathaway underperformed by 16%, plus it didn't pay the 20% in dividends. So really it underperformed by more than 30%, by 33 or more than that, over the course of the last 18 years. So the edge has been lost. So if you're considering to buy stocks and buy Berkshire Hathaway to get risk off, I have to disappoint you, right? You're not getting risk off, and you're not getting any additional performance by doing so. And yeah, that's what I told my brother as well, and he was changing his mind based on that data. And maybe you can use that data as well. I don't have a crystal ball either, right? Maybe this is just a temporary underperformance of 18 years. And if your time horizon is 100 years and you're actually just buying for your grandchildren, maybe Berkshire Hathaway is the way to go. But this is always, this is the caveat. This is a politically correct caveat. I don't work in corporate anymore. I don't have to be politically correct. I just state my opinion. And if you disagree with this, of course I do get heat. And this is actually not always easy, right? I even used to have my avatar, my name of the channel used to be Gerhard, and then I got a lot of criticism for this, and we even recovered a little bit in crypto, and I changed it back to Gerhard. It's maybe also a bit more serious on another note, so I keep it now at the current Gerhard. But yeah, the feedback you get from the people around you does impact you. Be cautious what content you consume. Be cautious what people you surround yourself with. And even if you've got a strong opinion, if you've got many people talking differently, you might change your opinion. And that's the problem actually with investing fundamentally. The issue really is that investment returns are concentrated towards a minority, towards a contrarian minority. The contrarian tends to make more money. And Warren Buffett used to be a contrarian, right? He used to buy, I forgot how it's called in the stock market, something like cigarette butts. He bought the butts of the stock market. So the failing companies, the bad companies that sold off more than their intrinsic value would imply. So he got the he got companies at a strong discount. Not great companies, but he got strong enough of a discount. And he made his first money with that approach. So he was very contrarian. And even afterwards, right, he tended to go contrarian. He tended to not buy into the tech hype. He tended to buy insurance when it was not sexy. And he was also part of the adoption cycle of stocks, right? The introduction of 401ks brought capital, brought liquidity into the markets. Investing in general became more and more popular over the decades. And so he was part of the minority as well. So what I'm saying here is you really have to be comfortable doing the investment that nobody else is willing to make. You really have to be okay with finding opportunity where other people don't see it yet. And you have to be okay, and that's actually the much harder part, to sell your top performer when everybody around you gets hyped about this. I find this actually quite interesting. Let me tell you a story. My wife, she is not into investments at all, right? I take all of our money management topics under my hand. But she used to be a flight attendant. Now she works in insurance. So she does some insurance sales on the side to do her personal consumption, that type of consumptions that I don't want to necessarily support. But she can do whatever she wants with her own energy, with her own work. And so she does that. Great for her. But so she sells insurance. And so she talks to a lot of people that save money, that work, but that don't necessarily do investments as their primary thing. And so every now and then, right, every few months, so this may be every, I don't know, 10, 12 months, once a year, she would suddenly talk about investments with me. And it's always, always, always about the investment that's currently peaking. So she asked me about, should I buy Bitcoin with her savings when Bitcoin was close to the all-time high? She asked me about buying gold and silver when silver just crashed a few days afterwards. It seems to work perfectly. So whenever the grandmasters talk about an asset class, when everybody, when always the surrounding tells you, should I buy now? It seems to be so exciting. That's really when to get out. It's not something quantifiable. I don't have a great metric about this. We can, of course, try to quantify this. We can look at Google search trends, etc. It's not perfect. It's a first indicator. But there is really strong correlation between whenever price appreciation has been quick enough, it tends to garner a lot of attention. That attention might be created by traditional media. Maybe Wall Street is behind this. Maybe Wall Street is loading up on a rallying asset, adding a lot of leverage just to dump then on all of those stupid people that watch Squawk Box, right? That watch traditional finance. Maybe there's a conspiracy element to it, but there's definitely an effect here that when the common man talks about a particular asset class, that asset class is to be avoided. I'm not saying to sell all of it, but yeah, again, portfolio management, right? When you look at capital shifts across asset classes, you probably want to be under-allocated, relatively speaking, towards that asset class during those points in time. Yeah, I'm not going to highlight all of the comments that I see over here. Actually, why don't I just put those? No, I'm not going to put the entire chat in the screen. That's probably not so good. I still want to be selective what to discuss here. Maximum saturation towards the rainbow chart. Yeah, the Bitcoin rainbow chart. Let me talk about that for a second. Right, so here's a comment by Nandos9065. Maximum saturation. So the rainbow chart will have an inflection point downward. So in case you don't know about the Bitcoin rainbow chart, it's some kind of a regression, I believe, some kind of an approximation that tries to figure out where Bitcoin is relatively speaking. Is it currently high? Is it currently low? It tries to figure out where we are in the cycle. Unfortunately, it doesn't work that well, right? It predicted prices of around 130K when we peaked at 70K. And it predicts a bottom, actually not at 16K, but already earlier at 20K in 2022. The reason why I say this is because in early versions of this chart, there was no purple line. There was only the blue line. So what's happening here is that this chart gets adjusted all the time. Here's an old version that's not getting updated. There are adjustments to this rainbow chart, and it's just rewriting the narrative as it continues. I'd not be surprised that if we suddenly were to hit, say, 40K in Bitcoin, that then suddenly this entire chart gets redrawn again. And maybe this is what this comment here is also referring to. We might have an inflection point downward. Maybe this is referring to we have a reflection point in Bitcoin and we suddenly rally. I do not agree with this. I rather think that this chart gets updated yet one more time. So there are better indicators than the rainbow chart. It looks enticing at the beginning. It was created a bit like a joke. It's even written here somewhere on the website. It's not investment advice. But yeah, be careful with things like this. Rather use things like the net unrealized profit and loss, right? Things like this. And even then be aware that Bitcoin was created at the height of the global financial crisis, right? If you look at the Nasdaq 100 relative to US money supply over the long term, this was the dot-com crisis. This was the global financial crisis. We know about, at least currently, the correlation between tech stocks and crypto. The correlation might break down, but so far it hasn't broken down. Bitcoin was created over here, right, at the beginning of 2009. And it got real pricing at the middle of 2010. So really, since Bitcoin existence, we've never really seen risk on assets getting massively sold off. We have not seen a global financial crisis. We've not seen a dot-com crash. And this is to be considered, right? Even if we fall in the net unrealized profit and loss territory, in the negatives, and people are in net losses. This will, of course, be a better time to buy compared to buying now, but it might not necessarily indicate the absolute bottom for Bitcoin. Bitcoin might crash much more. If you take things like this, complete as religion, right? If you take things like the rainbow chart as religion, effectively what you're saying is that tech stocks cannot go down more than 37%. This here is a chart of tech stocks since the creation of Bitcoin. So this is all the volatility you would expect in tech stocks if this is all the price history you had. This is the price history that we currently have for Bitcoin, right? So we don't really know, especially given the correlation right now, which might break down. We don't know. We don't right now know what happens to Bitcoin if this was to repeat it again. If AI was to crash like .com, then we really have no idea where Bitcoin will be at that point in time. And so that's why it's important to be diversified. I come to this back time and time again. It might make sense to have more Bitcoin when we are in net unrealized losses, but it still does not make sense to have 90% of your net worth in it. Unless, of course, your net worth is only 2 or 3 months of your monthly income. And if those 3 months go to 0, that doesn't matter to you because you can just save again for a few months and you're back at square one. But if your net worth is several years of your income and you put the majority of it, 80, 90% in Bitcoin, even when we are in net unrealized losses, and if that was to then suddenly crash by another 60, 70, 80% because the AI bubble was to pop, then you've got a problem, right? You can't save your way out of that. That's why risk management is so important when you look at your net worth relative to your income. If your net worth relative to your income is low, you can take risk, you can gamble, fine, no problem. You can try to get into the 1 or 2 year mark and then start to become more serious about investing. But once you are at 2 years, 3 years, 4 years of net worth relative to your income, you really cannot go too much high risk on, even on high conviction plays, even on things where you think this might work out really well, my risk versus reward is really worth it. You still have to be diversified because you can't save your money out of it, especially if you're getting closer to retirement, if not just your net worth relative to your current income is high, but your net worth relative to your expected future income is high. So if your income is peaking and it's not growing that much anymore, or if your income is even shrinking because you're approaching retirement, you have to be even more risk off. It's all about net worth versus future income, to be more specific. So yeah, be careful, right? This is not necessarily so great. We don't really know what happens if, and we don't know if that happens, but if suddenly tech stocks were to crash. Will this be a more moderate bear market? Yeah, maybe, maybe not. There is a case to be made, right? When you look at the net unrealized losses from one cycle to the next, they tended to be less severe. When we measure this from the price tops to the price bottom, they also tend to be less severe from cycle to cycle. And so this would indicate that maybe this time we are not going to go down by 73, 74%, but maybe only by 65% or so from the market cycle top. But again, this implies that we are not going to see any major issue in traditional finance, which we might not. So I will definitely buy when we are in net unrealized losses. Don't assume otherwise, right? I am going to buy a dip when we are here, but I'm not going to put all my eggs into that one basket because my net worth relative to income is several years. And also my income is very fluctuating. It's very unsafe to a degree. And so I want to be a bit more safer on my investment side as well. I like those. They're great. Love the insight. Thank you so much. This is very much appreciated. This crypto market is not good. Too much manipulation for the regular can't make money. Yeah, that's good and bad, right? We can make money with manipulation. You just need to be skilled enough. That's another thing I like to talk about. If you just want to get the average performance, you can just set and forget, right? So if you want to get the average performance across all asset classes, you buy VOO for the S&P 500, you buy Bitcoin for crypto, you buy a small flat in a big metropolitan area in the city center. You want to get the average property return. You buy gold for the precious metals market. You just buy all of those things and you set and forget, and you get the return of the monetary debasement. Maybe a bit less than that. So that's the easy path. That's when you want to focus on your active income. This is probably what you should do if your active income continues to grow and if your net worth relative to your active income is not so big. You should actually focus on just getting more active income. This is also what I do here with my crypto channel, right? It's always nice to have active income. Your capital is just an additional lever to your active income. But the more lever you have, the more capital you have, the more you can concentrate, of course, on that lever. But once you have enough capital, it does make sense to focus on one market to outperform that market. And this can be crypto. This can also be something else. I mean, since you're watching here a crypto channel, it's probably going to be crypto. But if it's not crypto, that's totally fine as well. You can focus on the car market and you can start flipping cars, right? Cars are interesting for flipping because it's a market that's not very homogeneous, right? One car is not the same as another car. Car A has different specs to car B. Car A has different mileage to car B. And so, of course, cars on average go down in value over time. That's the problem. That's the headwind that you're facing. But the car market is priced very inefficiently. There's a lot of people that are in the market out of necessity. They have to buy and sell. Many people buy used cars because they don't want to buy a new car. New cars depreciate so fast. And so just everybody is in the market out of necessity. Nobody knows how to price them, given all of those variables. And so that's how car dealers make their money. So it's a market with a lot of uninformed investors that is hard to price because of all of their variables. And that's where you can make money. The same is true for crypto, especially when it's growing, right? Crypto has a lot of different assets to invest in. And if it's growing, there's also a lot of new investors coming in, making pricing very inefficient. This is not true, for example, for the currency market, right? The currency market is very homogeneous, as in it's very fungible. $1 is the exact same thing as another dollar. There is no pricing inefficiency. There are many quants, many hedge fund traders that are your direct competition. If you want to get the average return, if you just want to get monetary debasement, 6.8% per annum, you just want to preserve your purchasing power. And if you want to gain purchasing power versus consumer goods, but you want to preserve your purchasing power versus assets, just have that class, just have that portfolio of diversified assets. If you want to outperform, then per definition, you are taking away purchasing power from other market participants. The market only returns X, and you want to get X plus Y. The plus Y is a minus Y of somebody else. That means you have to be better than other market participants. That means you have to have more skill than other market participants. You need to know more people in that market. You need to have a better access to deals in that market. You need to be better at analyzing the asset in that market. You need to be among the top performers in the market because, again, market returns outperformance is also concentrated towards a few winners. There's only a few car dealers versus many people that lose money on their car when they sell it or when they buy it. So there are a few people that make all the profit. There's a vast majority that loses. It's the same for any market. It's the same for the property market. It's the same for the crypto market. So do not try to outperform every market. Have one market that you focus on, where you learn everything that you can, where you try to learn faster than the average market participant, where you get an edge, where you're not just above average, because the average investor still underperforms trying to actively trade, right? The average trading return is lower than the average and the median trading return. No, yes, correct. And so what you have to know, the average trading return is higher than the median trading return because returns are concentrated. And so you don't have to be just in the top 50% of traders. You have to be in the top 20 or top 10% of traders or of informed investors in a market. If you try to beat a market, you have to be in the top 10 or 20%. Otherwise, it's not going to be worth it. And so because of that, because it's so hard to beat the market, just pick the one market that you think you can beat. Pick one. If it's crypto, then you're more than welcome, right? You're welcome to follow my content. You're welcome to try to beat the market like I do, like I've successfully been doing for the last years. So do that if that's your thing, if that's a market that you've got an inclination towards. But if you're already very good in property because you're a property agent, or if you're super good in tech because you work in tech and you know exactly that I don't know, MongoDB is going to collapse because it has now competition from another non-relational database that's growing much faster. And you have that kind of knowledge that most people don't have. Then trade technology stocks, right? Short MongoDB and long the NASDAQ 100. It's just an example. I have no idea about MongoDB. I've been out of active software development for years now. But if you've got this kind of knowledge that most people don't, then use that knowledge. If you are a property agent, you know your area much better, you know what's a deal and what's not, then use that to your advantage. Whatever knowledge you have, whatever passion you have, wherever you can invest a lot of time in the market and it doesn't necessarily feel like work to you, then you've got a chance of becoming one of the most informed participants in the market, and you might be able to make X plus Y. If you're not among the top, then forget about it, right? Don't try to beat the market. But if you are okay, right? If you're fine with getting really deep into crypto, then manipulation can be a good thing. because you will be able to recognize manipulation, and you will be able to recognize when the manipulation can stop, and you will be able to bet against the manipulation and make money from that. And that's how we make money with our relative valuation trade vault, right? So that's the plug again, right? This is the moving average vault for Bitcoin. That's different. Here's our vault where we bet on falling altcoin prices. It's going up, right? It's up 17% since inception. So yeah, so annualized 17%. So yeah, that's about it, right? You want to figure out something where you can beat the market, where you're better off than the rest, where you know more. Because in the end, all trading is a game of luck and skill, and there's always a luck component involved. But over the long term, you've got some kind of expected value that's hopefully positive, where you're better than the market, and that expected value is determined by how much skill you have, how much better and more informed you are compared to most others. The more informed you are, the more Y you can make in the X plus Y calculation. I want to hear your views on finance and stocks. Yeah, I've already talked about this. I don't think it's that off topic, actually. I like to talk about other asset classes as well. Could start another channel for topics like motivation, business. Yes, I could. Unfortunately, I don't really know how to grow that kind of channel. I get positive feedback by those kind of talking head videos where I discuss these topics, but those videos perform really poorly. And it's very hard to grow a channel like this. The only people that I know that are able to grow those channels tend to be podcasts. And the way they grow their channel is just by people searching for the people they're interviewing. Right? If you interview somebody famous, those famous people get searched all the time, and then they might land on your podcast and they might subscribe. And that's how many of those business channels grow. But if you just talk about generic, personal, life philosophy, mindset kind of videos, it's hard to grow. There's Alex Hormozi. He's very successful at this, but he's also way above my league, right? He's got hundreds of millions of dollars. Potentially he's already a billionaire. It's hard to compete with the Alex Hormozis of this world, right? And he has, by the way, super good content. If you haven't watched him yet, this is a guy to take advice from. Maybe not in all personal life situations, like in terms of, I'm not sure if it's that great to delay, for example, or to completely write off the idea of family planning and children. But that's another thing, right? It's probably politically incorrect to talk about it. But I do think that most people will not be that content. Just have a look at the people that are 50, 60 years old without kids versus the ones that have kids, and make up your mind where you want to be in the future. But yeah, a thing for another day. And I might make a video on this channel, but again, it's like super off topic, right? Talk about family planning on a crypto channel. But yeah, feel free to let me know if you want to hear these kind of things. What are your thoughts on Elliott wave theory? I don't like it at all. There is, back in the days, I saw a software that was calculating Elliott waves for the stock market. That was pre-crypto, before there even existed crypto. And that software simply calculated the different patterns, right? So 1, 2, 3, 4, 5, and AB correction, ABC correction, and then the fractal nature of it. It just used an algorithm to determine those tops and peaks, and it did it as objectively as possible, right? It's just based on numbers. And using that software, you could not build a strategy that was profitable. And so think about this, right? If there's an algorithm to determine those cycles, and it's as objective as it can be, and it cannot beat the market, then what value does the strategy have? I think there's just too much subjectivity. People manually count those waves now and think that this works. The same is true for Wyckoff, right? The Wyckoff distribution. People count this manually, and it's the same as drawing trend lines on a chart. I like trend lines because I think enough people draw them. And so it can become a self-fulfilling prophecy, right? If everybody looks at the Ethereum dominance being at the all-time low or close to the all-time low, some people might consider buying Ethereum, and that then turns into a rally. So there is the self-fulfilling prophecy effect. If enough people believe in something, it will come true in the capital markets. Elliott wave theory, Wyckoff theory is not used broadly enough to become self-fulfilling. And so, yeah, I don't think it's useful at all. But yeah, this is simply just my opinion. Feel free to have another one. Okay, my mouse is having an issue. I can't scroll anymore through the comments over here. I'm not sure what's... Ah, now we go. Okay. I was already thinking about closing this live stream because I couldn't read the comments anymore. But actually, I still have some content on Solana. I also want to talk about that. Actually, before we go to Solana, one more thing about Ethereum. Since we see Ethereum crashing that much, this is a chart that I've shown several times on several videos here on this channel as well. This is the others dominance, the others market cap relative to the Ethereum market cap. So how are the smaller altcoins doing relative to Ethereum? And they are rallying. So what we're seeing here is Ethereum performing worse than the altcoins. The altcoins look bad, but actually on average, Ethereum is doing worse. Here's the inverse of that chart, ETH relative to the others market cap. This is not saying that the prices of many altcoins are doing that much better, long term at least, because there is token inflation, right? There are cash outs out of altcoins long term, but at least the market cap as a whole is relatively stable relative to ETH. This is a relatively long term trading range, right? This chart starts in 2017, and the trading range has been established, say, at the end of 2017. If we remove the initial initiation here of this trading range, and we look at the average price, the average value of Ethereum relative to the others, we are now bang on the equilibrium. We're maybe slightly even below the equilibrium, but the current momentum clearly is negative ETH. So there is a good chance that ETH will continue to sell off from here. It will continue to do worse than the altcoins. So if you want to bet on falling altcoin prices, I think the best hedge, right, if you want to be neutral to the market, is to bet on a falling altcoin price relative not to Ethereum, but relative to Bitcoin and potentially to Solana. But Solana is a bit more tricky. But yeah, I'll talk about Solana in a second. More on capital rotation. Is this Bitcoin price action part of a rotation out of tech? Yes, partially, right? Today, the Nasdaq 100 isn't doing that great either. Let's refresh this. It's recovering a little bit since starting of the stream. But probably then Bitcoin recovered as well a little bit, right? This is how it goes. There's so much correlation. BTC, USD, let's keep it easy. Yeah, recovered as well. So this is the game right now, right? It's all about credit expansion, credit contraction, and Bitcoin is just a levered bet on that. But this recovery, by the way, does not change my overall position on anything that has been mentioned here. It was more broad, right? The topics that we discussed here was a bit more broader. I have a question for you. Do you think Epstein files had anything to do with gold and silver prices and the crypto crash? No, I do not think so. I think it's noise. Of course, what's happening with Epstein is not great at all, and it might potentially, but that's the thing, right? It might potentially put some instability socially, as in figuring out how the elites are really thinking. But everybody already had that hunch. Now it's just getting confirmed. We all know that people in power tend to abuse that power. And then there comes some social dynamics to this. Then comes some blackmailing to this. Then comes the issues that popularity bring with it, right? Bill Gates cannot just go to a random escort. He has to fly to another island to keep this hidden. So yeah, this is then what happens. Will this in the end change anything fundamentally? Probably not. And the reason why I say this is, even with even using objective measures, Polymarket, not Polygain, Polymarket, have a look at what Polymarket thinks about Epstein. Will anybody be jailed for the Epstein files? 15% likelihood. Right? So if you think that something will happen as a consequence of the Epstein files, you might just buy this Polybet, right? You might just throw $1,000 in it and get $6,400 back by, I guess, the end of the year. Yes, by the end of the year. So that's a quite nice ROI. So the market consensus is obviously that Epstein has no impact. And so when the masses think that, it's probably right. That's actually the interesting thing, right? The market is right most of the time. The issue is when they are wrong, they are very wrong. And that's when we want to have our investments. For this particular case, I don't know why we would think otherwise. Yeah, I like Polymarket for that particular reason, not necessarily to make money with it. I did make some money with it on a very interesting bet, but I'll talk about this another time. But it's interesting to get some probabilities on real life events, to have an idea of whenever there are news, how relevant those news might actually be, and how likely certain outcomes might actually be in the future. Strategy will go to 0, as in MicroStrategy. Who knows? Right, so we can look always at the MSTR premium. When that's negative, that's potentially troubling for Michael Saylor. Or like when that's below 1, rather. It's still at 1.07. So for right now, for MicroStrategy, it's still profitable to buy more Bitcoin. MicroStrategy did not underperform Bitcoin in the very recent past. Of course, in the last months, yes, but in the last days, it probably was somewhat stable. So let's look at MSTR relative to BTC USD. Yeah, not really that stable. Okay. So it's fighting, right? So MicroStrategy is fighting. The issue really is when MicroStrategy has to sell Bitcoin, and that only happens if the stock sells off much faster than BTC. As long as they still trade somewhat in line, and since the beginning of the year they seem to be trading in a line, it should be okay, because not a lot of the obligations MicroStrategy has are just US dollar based, right? They are coupled with the Bitcoin price. So the leverage that MicroStrategy took is comparatively safe. So I do not expect MicroStrategy having to sell Bitcoin anytime soon, unless Bitcoin, of course, stays below the realized price for several years. But that might only happen if the AI bubble was to burst. So if that's happening, who knows? But of course, we don't want to be in MicroStrategy or in Bitcoin for that case. If, say, OpenAI was to suddenly declare bankruptcy or the like, which I don't think will happen in the near future. It might happen over the next years, but it's not going to happen in the next weeks. Do you take ever profit after a significant move, or do you ride it up or down with the moving average? I ride it up and down with the moving average, except if there's an extreme event like, say, COVID or October 10th. If we've got broad mass liquidations, forced liquidations across the market, then I take profit mid-move. But outside of those cascaded forced liquidations, I don't. So if you don't know what I'm referring to, right, have a look at the others market cap on the 10th of October, right? I did take profit with our relative valuation vault when everything crashes within 1 hour to that magnitude, right? Things like this are not natural. And we had something similar. We had something similar for during COVID. Not as quick, but also cascaded forced liquidations. Outside of this, I simply just follow the moving average. But of course, the moving average would imply, if we just follow the moving average, it would imply that we should keep holding potentially a short position even after we've crashed so quickly. But when we are at those low prices, it doesn't make sense to keep holding a short, right? It makes sense to close the short and take profit. But yeah, those are extreme events. Outside of those events, I follow the trend. The trend is your friend. The bear goes live for the ribbon cutting out of the bear market. Okay. Actually, the chart on ETH looks bearish. Yes, long term it definitely does. Short term, I'm not so sure. Glad I sold my ETH. Phew. It will not surprise me if you go to $500 in ETH. Actually, the volatility, even historically, since risk on assets have actually never really been sold off, right? We never had a .com bubble kind of crash. But if you look at Ethereum historically, people still forget how volatile it can be. This is ETH in US dollars. Just have a look at how much this went down. 94% from the all-time high. Who really still has this on their radar? That Ethereum used to crash 94%. Not saying this will happen tomorrow, not saying that it will ever happen again. But even if it was to crash only by, say, 85%, we would see $666 in ETH. Maybe that's the bottom, a bottom from hell. Who knows? Interesting, isn't it? Do you think that most people are way too focused on news with Bitcoin? Yes, I do think so. Most news are noise because news get created for capturing attention, for getting eyeballs. They're not created for seeking the truth. They're also created to manipulate the market, of course, by the people that own the news. Every crash, people try to find some explanation, while I think it's just repeating cycle patterns at this point. True, right? It's credit expansion and credit contraction. So you're onto something, blind shots. I think you should continue those thoughts. They have definitely helped me. Why would you buy Bitcoin when you can buy better tech as Casper? Because markets don't trade based on tech. Markets trade based on attention and based on credit. Don't we want to push this sector forward? Yes, we do, but we have to trade the market that we have, not the market that we want. Right? We have to be opportunistic about things. If everybody trades meme coins, even though we don't like them, but there's money to be made there, then you can try to hold your ideology, or you can try to make money. And yeah, I simply just try to make money in this market. I try to trade better than the average. I don't make a bet just because I think things should be different than they are. But I do agree. Casper does have better technology than Bitcoin. But yeah, just have a look at Casper, right? Casper relative to Bitcoin. Right? The better technology underperformed Bitcoin by 88%. That's the problem. That's the problem. So try to trade based on technology. I don't think the volatility is worth it. Donation, $1,000, vote yes. No, please don't donate. If you want to support the channel, then of course you can always join premium and make more money, hopefully, than you invest. Because you need to have some capital. I always recommend to have at least $10,000 to invest across asset classes to make it worthwhile. But it also depends on your level of financial literacy, right? If you don't know anything about finance, you might learn quite a lot from the tutorials. If you already know a lot, but you do have a lot of capital, then it might also be worth it for you. But yeah, don't donate money, right? I try to provide value and hopefully provide more value than I take. That's the big play here. I want to make you guys perform better over time and hopefully beat markets over time. Bist du Deutscher? Ja, ich bin Deutscher. I'm German, but I don't publish content in German because unfortunately the market is not big enough. I try to address the global audience. Do you think it's okay to invest in alt ETFs? No, I don't think it's worth it. Bravo to go live. Thank you, thank you. Solana ETF, Ethereum ETF, and of course Bitcoin ETF. Yes, those are the three crypto assets that are likely going to outperform most other assets long term. And the ETFs are one reason for that outperformance. Okay, and more questions about Solana. I will talk about Solana in a second. We already had a 2-hour stream, but hey, why not? I mean, I enjoy this right now. I really enjoy it. It's cool. Paper got used. I'm not sure if I understand what's written here. I learned a lot about relative valuation charts with your videos. Thanks a lot, mate. Yeah, thank you for that comment. I really think it's an underappreciated concept because really it's all about opportunity costs. Once you've got money, you understand that it's all just about a decision. Should I go into A or B? It's not about should I be in the dollar or in A or B. The dollar is really just a temporary measure during extreme times like we might be in right now. But usually we really do not want to be in the dollar. And if we are in the dollar, we want to get at least some kind of returns. But really, it's about just investment A versus B. It's not about US dollar valuations. Everybody thinks about, let's just say, people that don't have much investment experience yet think about investments in terms of their US dollar valuations. But it's really the wrong way to think about this. Let me know when we should buy in 2026, be specific. Yeah, I don't know. I'm buying when the indicators flash green again. I'm buying when we see money flowing into the space again, right? When the stablecoin market cap is going up. I'm buying when the net unrealized profit and loss metric is in losses. I'm buying when we are below the realized price. I'm buying when we go above the moving average, the historically best moving average. And why do I have so many indicators? It's because I don't just go 100% on and off. I have a gradient in how much I am invested. And I am more invested, the more flags turn green, right? So the ideal scenario is we are below the realized price, right? Bitcoin is below its average cost basis. We are above the 44-day simple moving average in Bitcoin. So we are already getting positive momentum, and we have capital inflows into crypto. The stablecoin market cap is going up. If those three things are all happening at the same time, I will have a lot of allocation towards crypto. I'm okay to have 40% of my net worth in crypto, because even if that was to temporarily drop by 50%, I'd be fine. All those indicators are green. Those indicators in the end will prevail. We will see the outperformance. But by the way, what I regard as high allocation is 40%, might be much higher for you if your net worth relative to your income is lower. Right? You want to be more risk on the lower your net worth is relative to your income. But yeah, you want to be risk on if all the stars align. When will this be in 2026? I don't know. I just look at the situation. I just look at how things develop. I don't have a crystal ball. I do not know what happens to the world economy. I do not know if suddenly investments into artificial intelligence dries up. I don't have a crystal ball, but I do have an idea when assets tend to be comparatively cheap versus expensive, right? We just look at Bitcoin relative to realized price. We just look at gold relative to the money supply. We just look at stocks relative to their earnings. We just look at property relative to the rental yield. So there are ways to measure them. There are ways to value them. There are ways to figure out, are they historically cheap or expensive? But when that happens, it's easy to say, is it today cold or hot? It's easy to say, is it winter or summer? It's not easy to say on what day next summer will it be particularly hot and a good time to wear more sunscreen. That's impossible to say. And so, yeah, that's how I think about this, right? We just take the market as it comes. Do you think short squeezes are less likely now that we are in a bear market? No, they are more likely, unfortunately, because in a bear market, we've got less liquidity, and so manipulation is easier. The long-term trend stays, of course, bearish, but we want to now be even more selective with our shorts. We want to enter a short position after a squeeze. So whenever we see a squeeze happening, somebody else getting squeezed out, That's when we want to slowly get into that asset with a short position. But yeah, the more we are in a bear market, the less liquid the market is, the more erratic the price movements, the higher the volatility, and unfortunately also the more likely the short squeezes. So thanks for the question. I don't think that's very intuitive for many people. Let's see, what else do we have? Even the stock market is getting wrecked. Yeah, that's just an extension of credit going down. Bear market is great, fellas. We have a nice entry point. Yeah, not yet. But in general, I do think that bear markets are great because bear markets, especially extended bear markets, as we have in crypto, lay the foundation for the next bull market, right? If we are at 100K, making a 5x is pretty much impossible. If we are at 30K, making a 5x is much easier, right? So especially if we already reached 100K, going back to the 100K seems to be much more likely. So when we are depressed, when we've come down from an all-time high, everybody watches that all-time high and mentally calculates how much return they might make if they bought now and we reach the all-time high again. So that's the nice thing about bear markets. The more volatility we have, the more profit we can make in a market if we know how to time it, right? If we are an above average market trader. The average return is X, our outperformance is Y. The Y is bigger the more volatile a market is because it gives us more potential for mispricing. We should definitely make a beginner's market analysis course on Udemy. Yeah, I think in the end it's all about yes and no. In the end, it's all about interest, right? Are you really interested in the game of investing? And if yes, you will just, at least that's how it was for me. You'll just continue to consume a lot of content in the space, and a lot of the terminology, a lot of the words that I'm throwing around, like volatility and correlation and PE ratios and all of these things, they will become natural very, very quickly. And then you can just consume all the content and will have an easy time. And you don't necessarily need a beginner's course to teach you this is what PE ratio is. You'll just hear it in a video, you will research it, you will ask AI, and you will learn that way. Especially with AI, there's now so much ways to learn something quickly regarding the common knowledge, right? AI is bad for advanced questions. Where will Bitcoin be next year? But it's good for fundamental questions that have been asked 1,000 times and that have clear answers. And for that, it's great. So it's easier to find answers to those kinds of questions than just Googling them, I believe. Your channel is absolutely the best on the subject. Thank you so much, and greetings to Switzerland. I'm in Malaysia, by the way. I used to live in Hong Kong. I come from Germany. I used to live in Hong Kong for 15 years. Now, because of lifestyle reasons, actually, I moved to Malaysia. It's a nice place. I can very much recommend to come here. If you like Asia in general, you have a bigger family, you want to reduce your expenses, you want to have a nice culture to be in, it's a great place. Name 5 cryptos you expect to be relevant in 2030. I can name one, and that's Bitcoin. I can't name any others. I have no idea. It's like if you ask me at the height of the .com bubble, what's going to be the best tech stock? Google hasn't even been invented at the height of the when there was .com, there was search engines were called Fireball, Lycos, what else? Fireball, Lycos. There was MySpace already around in the 2000s? I don't remember. But yeah, the winners were not even born yet. So who the heck knows what's going to be relevant in 2030? Maybe it's going to be some kind of AI-driven token that's going to be traded across those AI agents. I have no idea. But yeah, the leader Bitcoin is probably going to stay around. Can you recommend books or literature about portfolio management and strategies? Not really. There's too much. I basically got this all together through experience and consuming content and thinking about this over the years. There's one book in general about financial systems that help get a bit more of a macro perspective. There is Principles. There's two books. There's Principles by Ray Dalio, which I like, and there is Broken Money by Lynn Alden. She explains quite nicely how people got robbed of their wealth through the financial crises. And I don't just mean in terms of prices falling. I mean like in terms of literal regulation, right? It was, for example, illegal to own any gold at some point in the US. So you had to hand in your gold and then sell it for dollars that were devaluing very quickly afterwards. There's obviously bondholders that lose their purchasing power all the time when fiat currencies collapse. There's the fiat holders, right? The middle class that has their most purchasing power in fiat that then gets eroded away. Not just through regular inflation, but actually through hyperinflation. So it's important to understand those kinds of cycles because the day-to-day and the current valuations are discussed all the time, but the overarching trends that are actually stronger than the day-to-day, they might then overrule everything at one point, and nobody talks about them. And everybody is suddenly surprised when they suddenly become a reality. When suddenly people wake up, oh yeah, of course we were in the AI bubble. And of course, even though AI technology is useful, we had overinvestments, just like with .com, right? Internet is super useful. I'm producing this here, I'm talking to you here via the internet. We learn with the internet, we make money with the internet. It's the most useful thing since sliced bread. Yet we had the .com crash. So just temporary overinvestment. And who knows if the same is going on now with AI stocks? It's probably the case, right? The revenues relative to the valuations are non-existent. Everyone has a role model. Who is your foundational influencer behind your approach to understanding or anticipated market behavior? So yes, different influencers for different topics. For business, it's definitely Alex Hormozi. I've been following before it was popular. I think when he still had 50,000 subscribers or so. Alex Hormozi is really good in business. For market behavior, I have already very strong opinions. Before I started making content myself, I like to watch Ben Cohen. So Ben Cohen was actually an inspiration also why I started this channel. Because I could see that analytical content still had a place in YouTube. A lot of the crypto content at the time was BitBoy crypto, pump and dump kind of stuff. But very few people actually looked at the market or tried to look at the market objectively. Ben Cohen was definitely one of them. He's not always right. Obviously, he disagreed with me on Ethereum, for example. He thought that Ethereum might see another rally, which I disagreed with. And we all know how this played out. So I have now opinions that are maybe they are different to Ben Cohen's. I'm not sure if they're more refined, but they're based on different data. But he was one of the inspirations why I started this channel, and I'm very grateful for that because this channel definitely has changed my personal situation quite a bit as well. But yeah, I think for business, it's Alex Hormozi. For crypto, I like my channel the most because I just learned about this a lot. Yeah. And then, yeah, there aren't too many role models, to be honest. It also changes over time, right? Before I was in crypto, I used to be a lot in internet culture, as in developing websites. I have actually a programming background. I programmed websites back in the days. And there it's different kinds of influencers. It's different kinds of people. It's the startup, a lot of founders in the startup ecosystem that are then your role models. Paul Graham, for example, the founder of Y Combinator, he has written extremely good essays. The website looks like shit, but I want to show this to you if you're interested in some fundamental, even life lessons. This is worth gold, and it's maybe worth even making some videos about this because the format, oh wow, this looks now so much better. This website looked like trash. Let's see if there's still the original website anywhere. Here, Paul Graham. Yes, this is the website I'm referring to. Essays. Right, so he's an internet native. He has written his own programming language, Lisp. I believe he's the creator of it. And he founded Y Combinator, which is a venture capital firm that created a lot of good startups, right? Airbnb, Stripe, Reddit, they all come out of Y Combinator. And those essays are worth gold. They are worth every minute of your time. So feel free to read them. They have helped me a lot back in the days as well with mindset, with how to approach things. Instead of binge watching Netflix, just binge read those essays and you will not regret it at all. It will definitely bring you forward. It will shape your thinking, your way of thinking quite a bit. Paul Graham, feel free to also watch his interviews. Paul Graham is a very smart, wise guy. Okay, the market might be down. Isn't it just time to be waiting? Yeah, I think I've talked about the macro quite a bit now. You bought cookie prices tank. Yeah, this was back in the days when altcoins were still rallying, right? So I think I've been very vocal about shorting altcoins for a very long time. And when I change my macro, I obviously also change positions like this, right? I'm not holding altcoins when there's no altcoin season. Cookie was when there was still meme coin trading going on. Long time. First time on the show. Yeah, first time making this show actually. I'm a quant and Zebek holder. Yeah, make sure that you at least hedge the positions, right? If you're long quant and Zebek, make sure that you short Ethereum at the same time, that you can at least make potential gains with the outperformance of those alts if the macro goes down. Do you think about geopolitics when analyzing markets? No, I do not. It's not my I don't know enough about it. That's the problem. I don't have an edge in understanding geopolitics and in anticipating what's going to happen. There is, of course, so don't understand me wrong, there is a way to make money with geopolitics in the markets. If you, for example, could predict well that that there would be the conflict between Europe and Russia and that the Ukraine was to get invaded, you could have made a ton of money with Rheinmetall, for example, right? So with stocks that build the weapons for that war. Is that morally correct? Up to you, right? You're basically funding the war. You're funding the company that produces weapons. You're funding innovation into creating new weapons. You could say, okay, you're also supporting Ukraine, and maybe you are on the side of Ukraine on that conflict and not on the side of Russia. And so you're supporting one side of the war, but I'm in general, I'm more pacifist. I don't like wars at all. But you could make money with that. And there's probably also ways to make money the other way around, right? You could make money by betting on the war ending and then shorting Rheinmetall. There's also a poly market, right? If you're really deep in politics, you could just bet on political events. And ideally, though, of course, you want to be an insider in this, right? You want to know somebody in government that knows people, because markets tend to be efficient. The insiders tend to make those trades and they move the prices in the direction that's closer to the truth. And so in order to beat the general market participant, ideally, you want to be the most informed. Ideally, you want to be an insider. And interestingly enough, I don't even know if it's illegal on markets like Polymarket to trade based on insider knowledge. So let's say you knew that the Ukraine war was to end and you would bet on Polymarket based on that knowledge. Is that illegal? It's probably a gray zone even, right? It's obviously illegal to trade stocks based on knowledge about their earnings or based on knowledge of future events. Is it illegal to trade crypto based on knowledge you have around the project that others might not have. If you know the founding team very well, I'm not sure. It's not my personal approach how to trade markets. I'm going much more analytical. But if you knew a team and if you knew things that most people don't know, you know about an announcement that might come out about a particular cryptocurrency that hasn't yet been announced and you had to trade, is the SEC going to come and try to get you into trouble? Maybe it is illegal. Maybe there's no enforcement. Maybe there is enforcement that I'm not aware of. But there's definitely there seems to be something different in newly developing markets compared to well-established markets. In the early days in the stock market, it was probably also relatively common to do insider trading without repercussions. And so trading based on geopolitics, on polymarket, knowing things that others might not, if you have friends in government, who knows if that's problematic or not. But what I do know is that there are people that are definitely doing it, and they are definitely making money from it, and they are definitely moving the markets in the direction. If you don't have that knowledge, you're already at a disadvantage. So take that into account. You want to know the market better than the average market participant. Yeah, the best time to buy is before GTA 6 releases. Yes, I definitely agree with that. So there is no better market timing mechanism than figuring out when GTA 6 releases. What do you think about MicroStrategy and BMNR? Yeah, it's currently the premiums aren't big enough, right? We already looked at the net asset value premium for MSTR of 7%. There used to be a nice trade for the Grayscale Bitcoin Trust. So in the early days, before the ETF approval, the Grayscale Bitcoin Trust was trading at around 40% discount to its net asset values. And then as the ETF approval came closer and closer, the conversion of that trust to Bitcoin, to an ETF got closer. So as the ETF launch got closer, the conversion of that trust into the ETF got closer and closer until the net asset discount got more from minus 40 to 0, right? We got an outperformance of the trust. So that was one way to trade the delta of premiums. The premium has to be big enough, I think, to make sense, because there's also financing costs involved into doing something delta neutral. And buying MicroStrategy just as an allocation in a portfolio as opposed to Bitcoin is not necessarily something that I like, because we want to be diversified across asset classes. And so if you hold already native Bitcoin and you want to buy stocks, we ideally buy stocks that don't have too much correlation with our Bitcoin, right? So we don't buy Bitcoin mining companies, we don't buy MicroStrategy, and ideally we also don't buy too many AI stocks, right? We buy stocks that don't necessarily move that much with the crypto market. Again, in the name of diversification. If we just want to get the upside of crypto, we just buy Bitcoin directly. Why make it too complicated? Why not do the pure play? Once we go off the pure play, we tend to increase our risk, oftentimes more than our returns. This can, of course, be different for some opportunities, but for the vast majority, it unfortunately is that way. More live streams like this, please. Isn't it too early in Malaysia? Yes, it is too early. So I already talked about that at the beginning of the stream, right? So I prepared a live stream. I actually want to do more live streams, because in the end, I also want to cut some content, or ask my editors to cut some content out of this live stream for individual videos. So I don't have to record videos all the time, but just make a live stream like this and then get regular YouTube videos from this as well. So I think this is an efficient way to produce content. So I already played with the idea and prepared even a live stream. And then I woke up in the middle of the night for whatever reason. And what do we do when we wake up in the middle of the night? Of course, we check our phone. I saw the crash and I thought, okay, let's just now go live earlier than I first wanted to. I actually thought about going live at more humane times. But yeah, so I started going live. What was it now? It's now 2.5 hours ago. Now it's 5:47 in Malaysia. So I started live streaming at 3 a.m. But I also go to bed early. I tend to sleep at 8 or 9 o'clock. And then have my 7-8 hours of sleep because I like the morning hours. The morning hours are always the best. This is where nobody interrupts you. Got a family, right? Everybody always needs something. I want to spend time with the family as well. But I also want to have focus time. And the morning hours are the best. Nobody uses the morning hours. And the evening hours are usually quite useless anyways, right? At least for me personally. I work through the day. I do sport. I do exercise. I take care of daily whatever's things that come along. And so my energy level in the evening is already low. And so most people, at least I'm like this, tend to be not as efficient in the evening compared to the morning. Once you have established a sleeping routine where you sleep early and you wake up early, the morning hours tend to be better than the evening hours, I believe. That's at least how it was for me. So if you've got some kind of target to work towards too, but you know what you want to do, but you just don't find the time, try to sleep earlier, right? And if you can't sleep early yet, use the first 3-4 days, take some melatonin the first 3-4 days until your inner clock has adapted to the new sleeping pattern. Then you can drop the melatonin and then your body will automatically get tired at 8 o'clock. Make sure though when you do this, right, a bit more life advice, a bit off topic, but why not, right? We've got time, we've got already more than 2 hours here. When you do this, make sure that you don't have your dinner too late, right? If you sleep at 8 o'clock, don't have dinner at 7. So it makes things a bit antisocial potentially. You have to align other people with your rhythm as well. You might rather have lunches with other people than dinners and things like this. But yeah, if you eat at 5 and you sleep at 8 or 9 o'clock, you've got phenomenal sleep once you got used to this. And you've got, especially, and that's the main thing, phenomenal morning hours that will be very productive towards whatever you're working towards, right? You have some focus time, something that we're all lacking. Thank you so much. I always like these positive comments as well because there's so much negativity also in crypto, especially during a bear market when people lose their money. People just try to vent their frustration, and that frustration obviously goes to anyone, myself included. So getting positive feedback is very much appreciated as well. I have Bitcoin and alt longs that I thought that I bought just before the peak. Is it a good idea to sell them now and go short after you've already dropped so much? Yeah, I've got my standard answers to those kinds of questions. Really, what you want to think about is not should I go long or should I go short. Really, what you have to think about it fundamentally is, since what you've done in the past didn't really work, how can you change your approach fundamentally that things will be better in the future? And with that, I mean market timing strategies, right? Like the moving average. If you then follow this religiously, you might go short now. But then you need to have enough conviction in that strategy. If you've got another strategy, take that. But you need to have probably a different approach. And if you're now thinking about selling after you've bought at the peak, you have to also think about this in terms of your portfolio allocation. How much do you want to be exposed to risk? Because ideally you want to do the opposite, right? When it drops, you want to buy in the grand scheme of things. So the way I think about this is, how much percent do I want to have in each asset class at what point in time? So if we are below, we talked about this already an hour ago. I'm not sure how many people watched this for an hour, but if you are below the realized price in Bitcoin, if you think Bitcoin, for example, is very cheap, I'm currently not there yet. Actually, I talk about the realized price all the time, and I've not even shown it once now. So let's do it. This is the average cost basis of the market right now, how much people have paid on average for their Bitcoin. It's currently at $55,000. If we are below that average cost basis, the market is in net unrealized losses, and that has historically been the best time to buy. So when we are below that price level, $55,000, it might make sense to have more allocation than usual towards Bitcoin. For me, the upper range is 40%. For you, it might be higher if your net worth is lower relative to your income. But that's when you want to have the high allocation. You want to have lower allocation when we are above the realized price. You want to have potentially even lower allocation if we are at historically high net unrealized profit. Right? So that's when you want to have, when we are in the green here, you want to have very little allocation, maybe only 10 or 5% of your net worth in crypto and in Bitcoin. So think about approaches, how you manage your risk. Think about your approaches, how you manage momentum. Think about this fundamentally. Set up some rules. So that would be my advice. So instead of thinking about what should I do right now, think about what should I do in general, and then follow this, right? Build a system for yourself that you think is robust enough to withstand the cycles and to not expose you to more risk than you can psychologically manage, right? So if your net worth drops by 20, 30%, is that okay with you? If your net worth drops by 70, 80%, is that okay with you? Where is the line? And the line should probably be drawn based on where your net worth is relative to your income, right? 80% drop is fine if you only have 2 months of your income. 80% drop is not fine if your net worth is 10 years of your income. So, yeah, think about it in that term. Think about what is my ideal allocation in a completely balanced market. No asset is particularly expensive or cheap. How much do I want to have in bonds and property and stocks, crypto, precious metals? What would be my allocation if everything is zen and in balance? And then given your current estimate of where the markets are historically speaking relative to one another, how should I then adjust my current position, my current allocation towards each asset class? Yeah. So that would be my answer to whether or not you should sell, right? Don't try to answer that question. Try to answer a much more fundamental question. The only crypto I'm looking at is Kita. Yeah, well. Do you think we'll have a relief bounce? Yeah, we might see one, right? We are already quite extended from the moving average. We could definitely short-term see anything. It's very hard to time the short-term. Try not to time the short-term anyways, because you have also, if you try to time it while trading, right, by realizing on that, you've got lots of fees as well. And fees are again against you. The same way how insiders take money out of the market, market makers and centralized exchanges through fees also, and slippage, also take money out of the market, and you don't want to be exposed to that more than you have to. Soy please. Yeah, I will make dedicated videos on that. I think for individual altcoins it's better to record videos and answering that in live stream, because the vast majority of viewers will not be interested in a particular altcoin in a live stream. I'm a more aggressive scalper or swing trader. Honestly, to see you live, it's like a dream coming true. Oh, thank you so much. Yeah, so I am a swing trader, I believe. So my time horizon for most trades tends to be, so I've got my asset allocation, but when I move with momentum, it tends to be several weeks ideally. I don't want to trade short term. If my investment thesis suddenly invalidates, I have to quit quickly. But if my investment thesis plays out, let's say there's a short squeeze of an altcoin and I short the altcoin, I bet on falling prices of the altcoin. Ideally, right, the falling prices continue for a while. They continue for several weeks. And then I close the position once the short squeeze has deflated. If the short squeeze continues, of course, right, I've got my stop loss, then I exit just 1 or 2 days afterwards, or a few hours, who knows when the short squeeze continues. So ideally I want to have a longer time horizon, but yeah, I trade over the course of several weeks ideally. And of course, asset allocation is forever, right? There is no time horizon for that. Do you think Bitcoin will crash more? Yeah, long term, probably. Short term, of course, who knows? Do you think Bitcoin will drop further in the short term? Yeah, as said, I don't like to make predictions about the short term unless we have extreme situations like, can I find it again? No, I can't. Unless we've got extreme situations like a flash crash on October 10th, right? When we are down here, then I think it's fairly safe to say that we will get a recovery. But outside of those extreme events, the short term is extremely hard to predict. When Bitcoin was at 124K, I wish I bought it 80. Now it's at 75. I'm not buying. Yes, the market takes the path of most pain for most people, unfortunately. The vast majority loses over time. Oh yeah, hasta la vista. Genau, there comes my German. That was one of the most popular search engines at the time as well, besides Fireball and Lycos. But yeah, now we've got Google and all of those are forgotten. That's actually funny. Let me do this. Hasta la vista search. Let's see if this still exists. Box SK, exactly. It had a very funny domain name as well. Let's see if this still exists. Now it's just Box SK and it's blocked by my NordVPN. Yeah, I'm not going there. I don't remember that user interface though. This was like really OG. Gambling.com was advertised. I think they changed their user interface a bit over time. But yeah, there was also a thing called web directories. I'm not sure how old. I think most people are my age here actually that watch. Some slightly younger, some slightly older. But there was a thing called web directories. Before search engines got popular, people were clicking through directories like folders, like links over links over links to find websites. And you could register your website in a directory and hope for traffic from those clicks. It was a different time. I really feel old saying this. I'm not 39. Man, I'm so wrecked. You are not the only one. Should I sell after a 70% downturn? It makes no sense to sell now. Yeah, it's the same question we had before, right? Think about your approach, not about what to do now. Please, what do you think about symbol on TradingView HYG? I don't think that. So for questions regarding the live stream, I think it's best to ask questions that might be relevant for most people here, because I don't want to be too specific in anything. Because yeah, I don't want to bore the majority here. What do you think about being in constant debt to negate inflation if the cash flow of the company is constantly positive? Yes, this is a very good idea, and most people will tell you it's a bad idea. This is great, and this is a very counterintuitive take on things. Think about this, right? The companies that ride our financial system the most tend to have most debt. If you look at the debt to equity ratios of banks, it's through the roofs. Banks are massively, massively levered because they know that they make money as money devalues by having debt. So owning debt is great. Owning debt is a bit like fire though, unfortunately. And so this is why the second part here of your question is so important. The cash flow is constantly positive. And we can even do this on an individual level, right? You can take a personal loan. If your salary is super constant, you work for the government, or you have an employment that is very safe, that has an increasing salary. Even if you were to lose that job, You would find a new job in an instant. You would maybe even have some wealth on the side that in the worst case, right, some assets on the side that you could sell in order to serve the debt. If that's your situation, levering up by buying something that goes against the devaluation of the US dollar is very, very good. But again, there's all these caveats, right? You don't want to be overexposed to the debt. You don't want to get into the risk of losing, of not being able to serve the debt. You want to also only buy things where you've got high conviction in to outperform monetary debasement. So don't take on a loan in order to buy an altcoin. Don't take a loan in order to just buy Bitcoin. Take out a loan in order to buy many things. Buy some gold, some stocks, some Bitcoin, some everything, and counteract monetary debasement that way. Makes a lot of sense. Right now though, right, given that everything is expensive, it's a risky strategy still. So I would prepare myself for that. Make sure you're able to take out the loan, but wait for a crash somewhere. Something will give somewhere. Something has to implode. Commercial property, for example, is also super expensive now. The financial system is also not very healthy now. There's many things where prices could collapse. And so I would wait for an opportunity and start with just a little bit of debt exposure after something has crashed and buy slowly into that thing. And then as that thing crashes more, maybe buy a little bit more in this. And then when that crash is over, wait for the next crash of another asset and then take on additional debt to buy that thing. And yeah, just take a longer time horizon on that, right? Since the debt should also not be, you should pay off that debt over several years. And so your investment time horizon should also be over 4, 5, 6 years. So wait for crashes over the next 4, 5, 6 years. And every now and then, if something goes down enough, add a bit more leverage to the company and take advantage of the debasement of the currency. One very easy way also to do this is just to buy property, right? So when interest rates come down again, just lock in those low interest rates and buy property. There is a bit of regulatory risk here, right? So if this becomes too popular of a trade, the government might consider raising taxes on property that could counteract things. But usually that's the way to play the game. When interest rates are low, lock in those interest rates forever and buy something that appreciates at the pace that the US dollar devalues. So yes, great question. Good thing. I've personally even taken out a loan once to buy assets. I talked about this in prior videos, I think twice. But yeah, our stream is already so long. I haven't even talked about Solana. I don't know how to stop this. It's too much fun. You just bought the books that I recommended, right? Broken Money by Lynn Alden and Principles by Ray Dalio. And of course, feel free to read the essays by Paul Graham. But yeah, you will not regret it. We talked about gold, Bitcoin, stock market. Not the best place to invest. Yeah. Real estate might be a good, if you know what you're doing with real estate, that might be a good way to lock in some prices that are not yet too inflated. But make sure that you can refinance this easily once interest rates drop. So prices aren't great, but aren't too crazily bad. If interest rates drop, prices are very likely going to go further up. So that could be the next potential rally. So locking in property prices now, if you know what you're doing, if you find something cheap, if you're above average market participant in that market, could be an approach, yes. What do you think about the Sailor's price predictions? Yeah, I think they're too optimistic. My base case is that Bitcoin will appreciate by roughly 20% per annum over the long term. That's based on how much the circulating supply contracts over time, because Bitcoin gets lost. It's based on monetary debasement, and it's based on still some increasing adoption of Bitcoin as an asset class for a portfolio diversifier. 25% per annum, 25 being the upper range over the next, say, 10 years. Are they paying community meetings? Not necessarily. I'm not even sure if it's without risk. Maybe because if you just meet in a small place with people with a lot of money and you've got some bad actors, that's not necessarily great. I am considering maybe to do a little bit of a meet on the side, maybe at the next crypto conference. There's a crypto conference in Dubai coming up, Token 2049. I was at the 2049 in Singapore recently. There's also one in Singapore this year again. I think it's an annual conference in Singapore as well. So you might see me at Token 29. I might organize a meeting over there. It will just be probably meeting at a restaurant or something. It will be in Asia. So I know the majority of people watching this channel are not from Asia. Some are from Australia. So for you, it might be better in terms of time zones. If you want to make the travel, because you want to go to the conference anyways, you might, but it's just like a little meet at a restaurant probably. And we can we can interact anyways as well. Yeah. Okay, we've got a bit here about sleeping patterns. So yes, waking up early is it's a life hack that's worth exploring. Especially if you're motivated, right? If you've got something to do, you've got some target you want to achieve. The morning hours are the place, are what's really the time where things are done. What do you think of August von Maxen? I am zooming out with my analysis, but not all the way to the Roman Empire. So no real thought about this. But the idea is that empires rise and fall, and maybe the US might be a falling empire, but I'm actually not so sure about that. The US dollar as a reserve currency is getting used less and less, but many places on Earth are struggling. And some of those struggles are so fundamental that it's hard to recover from this. You've seen this with Japan, for example, right? Japan was a rising power and is now slowly dying, literally dying because of demographics. Still a very nice place to go to. I just had a vacation there. I did skiing in Niseko. It was very nice. And in Haruba. Is it called Haruba? Yeah, it's a hard time remembering those names. But yeah, Japan is clean, is nice. The culture is super great. It seems to be, maybe coincidentally, also close to the German culture in a way. Everything is very precise, very rule-driven, very clean, very friendly, polite. But the economy is struggling, and that's because of demographics. And the US so far does not have the demographics problem. They still get enough children and they have enough immigration. The American dream is still popular enough of a story, and the big monopolies, the global tech monopolies, are still in the US. So the US is set up relatively okay. When you look at China, China has now the Japan problem. They have got the demographics problem. They work against this. They still have comparatively cheap labor. They are the leaders in electric vehicles. But eventually, demographics will catch up. So that may, and Europe, let's not talk about Europe, right? Europe is screwed anyways. So globally speaking, relatively speaking, the US doesn't look that bad. I wouldn't want to live there. They've got huge problems with regulation, with maybe corruption, try to be politically correct maybe. There are issues with the US, but economically speaking, they are doing okay. I think the long-term outlook for the US, long-term as in the next 20 years, is probably positive. You want to invest your money, we completely ignore potential impacts of regulatory changes. The US is still better than most other places. So just as, again, opportunities that might present to oneself might not be the worst place to be invested. Get it, you're going through one by one. Yeah, I try to. Not one by one, but like the interesting ones, yeah. Clip a lot videos from this live, yeah. I don't, to be honest, I do not enjoy editing. So editing was one of the first things I've outsourced, and so I will also not enjoy clipping. But I don't hold the copyright on any of my stuff. So if you guys enjoy editing, if you guys enjoy clipping, feel free to just do that, right? I don't have any presence on TikTok. I don't have any real presence on Instagram. The shorts, the YouTube shorts that I generated are all automatically generated with AI tools. If you want to make a channel out of this, or if you have a channel already with similar content and you want to use the content here, feel free to just do this. Of course, it's appreciated if you also link to this channel and say where this content is coming from. But I don't mind at all if, you know, my face is on more channels, if this spreads more. So feel free to just use the content. I will not flag you for copyright infringement, so don't be worried about that. Do you have an idea why Hype has been moving the way it has? Yes, I do. I actually made a video. Just check out the recent video on Hyperliquid. They've announced to build a competitor versus Polymarket. But I've got my doubts that this rally is sustainable. It created now a lot of buzz because Polymarket is the thing, the only thing in crypto that's growing. But building the technology is one thing, getting market adoption is another, right? We've just talked about the .com bubble and about this friend over here, right? Alta Vista. There is a chance that the Polymarket by Hyperliquid will become the next Asta Vista, or Hasta la Vista, or Alta Vista. They're all the same. So yeah, keep that in mind. It now has a lot of excitement. Keep in mind also that that Hyperliquid has a lot of unlocks, right? The team gets token allocations and sells their allocations regularly. And they are reducing their selling. But yeah, feel free to simply just watch the video on Hyperliquid. Why not talk about this in the stream? Not everybody here is invested in that. But the platform, by the way, is awesome. I really like to use Hyperliquid, right? I've talked about this already before. All of our, not all of our, but the biggest of our investing, copy trading, investing, capital pools are on Hyperliquid because it's the biggest platform. And yeah, we are currently making money, right? Everybody's getting wrecked. We are not. And that's just based on our strategies. Yeah, I actually disagree here. Bitcoin bottom will probably be less extreme than the last cycle since institutions are involved and the asset is more mature. Yes and no. So let's go through this. It is true that from bear market to bear market, we had less. So let's take this quickly away. It is true that from bear market to bear market, we had less and less of a decline from top to bottom. This was an 85% decline. Here it was, I believe, 82. Then over here, it was only 76 or so, right? So we do see slightly less declines from top to bottom. The volatility in general is declining over time. The upside is declining more than the downside, unfortunately. So the risk to reward is decreasing over time. The reason why I say this is not a significant impact, first of all, we do not know what happens to AI, right? If tech stocks were to suddenly crash, that would not be good for crypto. But even outside of that, the reasoning here, right? Because institutions are involved, I think is wrong. Because have a look at the following here. Let's check the Bitcoin, no, not the Bitcoin treasury companies. Let's check the long-term holder versus the ETF flows. So the ETF flows and the treasury company flows, they are roughly similar in magnitude. So let's actually take them both. So we've got the treasury companies over here and we've got the ETF flows over here, right? Both of those balances are going up. This is supporting the Bitcoin price. Great. But what we're seeing here, right? So when we just look now at the Ethereum flows, when we compare those Ethereum flows to the long-term holders, they're very, very small. This here is the ETF flows, how much money is getting in and out of the ETFs, right? And this is how much money is getting in and out of long-term holder pockets. So really, the price development medium term is not determined by the ETFs, it's determined by the long-term holders. If the long-term holders sell, that is bad. That will not counteract whatever the ETFs and the treasury companies are buying. The treasury companies and the ETFs can buy as much as they want. The long-term holders still have the vast majority of Bitcoin supply. The entire supply that's held by ETFs plus treasury companies is roughly 11%. So 11% is held by Wall Street, 89% is held by all the other holders, and the vast majority of all the other holders are long-term holders. So really the long-term holders determine where Bitcoin's price is going. And so, yes, it's good that institutions are getting in, but they are not going to significantly dampen the bear markets. The bear markets are still going to be extremely painful. And they're going to be especially painful if we see an AI bubble collapse. But even if we don't see the collapse of that AI bubble, we will still get a significant decline. And yeah, so be prepared, right? Buckle up. Okay. Very rare to catch alive by Gerhard. Yeah, very rare that I do this actually. What's up? When collab with Into the Cryptoverse? Yeah, actually it would be a nice idea to do this at one point, since Ben Cohen was also an inspiration for starting this channel in the first place. I even talked about his charts that he publishes in his premium membership in videos here on this channel. So I asked them, hey, is it okay if I discuss some of the content that's actually for your premium in my just public videos? And it seemed like it was fine. I didn't get any strong rejection. I even asked, can I be like maybe an affiliate for you when I discuss those videos, those charts, that I just send an affiliate link to your account, and they were okay. I didn't get the affiliate link yet, so it's a bit slow, but it's fine. But we are very friendly to each other, and I'm very happy with the content that he's providing. It was definitely great inspiration for me. Having a collaboration with Ben Cohen would definitely be very nice. I would very much enjoy this, for sure. Has the Japan effect kicked in yet? Yeah, I'm not sure if that's related to demographics, but yeah. In China, it definitely has. So China is now working against demographics, which can only last so long. Okay, I think for Solana, for discussing Solana, I'll record this in a separate video. I enjoy answering those comments a bit more than going now just through Solana again. But there will be a separate video on Solana either today or tomorrow discussing that. What do you think about Pengu? I think it's potentially a good asset to short in case it rallies in the short term. So if we see a short squeeze in Pudgy Penguins, we might have a good time to bet on falling prices relative to Solana or relative to Bitcoin. Would you ever consider heading a hedge fund at some point? Maybe. The overhead costs of hedge funds are quite high. And the problem is that really alpha in crypto is harder to achieve the more money is managed. So we could, of course, trade just Bitcoin and Ethereum using a hedge fund. But once we trade the altcoins, they are so small. Even if we just move a few $100,000 in an altcoin, let's say we short the altcoin, we already induce short squeezes. So the market, the altcoin market, is not liquid enough to generate enough alpha for a big hedge fund. Could we time Bitcoin and Ethereum using a hedge fund? Yes, we could. But we've already got decentralized finance. We've already got our copy trading vaults on Hyperliquid and on Gravity for that. And they are doing fine. And you can just go with that, right? If you're crypto native anyways, you might just move your funds to those platforms and invest. Everything is explained in premium, right? So let me show you. It's all in detail. In case you're not yet aware, there's automatic copy trading here. There's an explainer video about everything. And of course there are fees, but they are not as big as the typical hedge fund, by the way. So the typical hedge fund takes 20% of all the profits and 2% every single year. Here we only take 10% of the profit. And there is a deposit tax of 5%, but if you leave this for longer than 2.5 years, it's also lower. So you've got this here for Bitcoin, right? This is just following the best moving average in Bitcoin. All the backtests, etc., are also explained in this particular video. We've got the same for Ethereum. And then we've got the bets on falling altcoin prices. So yeah, we've already got something that's a first step towards a hedge fund. And I think the reason why most people don't do this, right, and most influencers don't do this, even though it's so simple to set up, it's because they're afraid of actually showing their performance. Right? When everybody is saying, oh, I'm making so much money, I'm made now $1 million here and $1 million there. But they're not opening a copy trading pool, then why, right? If you are so profitable, if you can get 10% of the upside, why don't you use that additional leverage? That's my question to them. Yeah, I'm not afraid of that, right? I'm outperforming Bitcoin for the last 5 years by on average now 2.1% per month. And while that outperformance is of course volatile, it is over the course of 12 months, it's still solid enough. Let's see. Do I find this here? Yeah, this is the picture. So yeah, so this is my alpha over, I showed this also in several videos. This is my alpha over buying and holding Bitcoin for each month. So each dot here is how much I was better or worse compared to Bitcoin in a particular month with my crypto trading portfolio. And the dotted line is the 12-month average. And if you average all of them, it's now at 2.1%. So yeah, over a 12-month period, a good trader should be able to outperform Bitcoin. In a single month, of course, shit can happen. But yeah, the higher your edge is, the more skilled you are, the more outperformance you should expect. So it's all just a game of luck. That's the variation, and skill. That's then what we get as long-term outperformance. And the expected returns for those copy trading vaults is of course higher than just 2% per month. That's because this is the risk on part of the capital, right? This has leverage, and it's managed leverage, right? There's risk management here, but this should be the outperformer within the portfolio. And then there's other more other positions that are less risky. All right. Are there any channels other than Ben's that you're a fan of? Crypto channels? No crypto channels necessarily. There are some crypto channels that are useful, but even then, the longer I watched them, the more I felt they didn't really go deep enough. So, yeah, not really, to be honest. I think it's very hard to find good crypto content. Many people just went into crypto for the money grab, to get paid by various projects. They're not, for my liking, not data driven enough. And but there are a few. There's like Bravos Research. That's quite interesting. But very often with my lens, when I look at the bigger picture, I see things that are contradicting predictions that are made. And yeah, it's just because I'm so long already in the space that I've got relatively strong opinions on things, that I do take inputs every here and there, but my my stance on things, they refine, but they usually don't fundamentally shift. Yeah. When will be the Bitcoin bottom and at what price? If we don't see the AI bubble crashing, if AI continues to stay stable, I believe the Bitcoin bottom, the absolute bottom will be at $30,000 roughly. And why do I say this? I say this because of the long-term holder cost basis. So this one here. So there is the realized price and there's the long-term holder realized price. And the long-term holder realized price is a more conservative approach to look at things. And this is now all under the assumption that we do not see traditional finance suddenly crashing. There's no global financial crisis. There is no dot-com bubble burst. There's nothing like this, right? We just continue on our merry way up. What's our expected bottom of a bear market? The long-term holder realized price is, so the long-term holder realized price is how much is the current price standing compared to how much people are in losses or in profit. If the market is currently, even for the long-term holders, in losses, it's a very good time to buy because the long-term holders, they don't sell at those levels. Long-term holders are long-term holders. They're betting on Bitcoin long-term outperforming fiat currency. Thus, the long-term holders aren't going to sell here. And historically, we always turned around at those levels. That was true after Silk Road and Mt. Gox collapsed. That was true after the ICO bubble crash. That was true during COVID. That was also true when Terra Luna, FTX, Three Arrows Capital collapsed. It was all true. So the long-term holder realized price is a good floor. Now, not exactly that price, but a certain percent below that. Currently, the long-term holder realized price is at roughly 40K. And historically, the price tended to bottom out at roughly 1/4 below that. All right, so have a look at this. This is 4,400. The actual lowest price was at 3,200, roughly a quarter below the long-term holder realized price. It's also true over here, right? Realized price, average cost base of long-term holders was at 21K. The quarter below this, 17, 16K, that was where the bottom is. And so currently we are at 40K. And so I believe if nothing systemic breaks, 30K in Bitcoin is the bottom. So I hope that this actually answers the question in a more definitive way than most people do. And I think this is a relatively data-driven approach to things. That does not mean that at 30K we can be 100% risk on and put all our money in Bitcoin. But I've talked about portfolio allocations already before, because it still assumes that AI continues to expand and that there will be no big shock to the overall system. Data center stocks cooked because of crypto crash. Not necessarily, it's just correlated assets. But I'm not in data center stocks anyways because of correlation. Do you think the Bitcoin core versus not affects the price? No, I do not think so. I think price is mainly affected by attention and adoption. And this is a topic that's deep to the to the core people, right? It's to the people that are really deep in the technology of Bitcoin. I would assume that the vast majority of people watching here haven't even heard of the discussion. This is actually now maybe another little segue to a crypto channel that I like to watch, not necessarily for market timing, but for actually those deeper discussions. There is a channel called Bitcoin University. Bitcoin University talks about these fundamental things, how inscriptions spam the network, how CSAM attacks might be done when Bitcoin can relay more data with every transaction. It talks about the technical fundamental issues that might arise. It also talks about institutional adoption and how it's a bad idea to hold your Bitcoin via ETFs, because now suddenly the whole idea of self-custody gets thrown out the window. So it's a very OG Bitcoin maxi channel, but it's good to learn some fundamentals around the technology. It's good to get some fundamental understanding. And yeah, this debate is also discussed over there. I do not think that it will help you much to time the market, but it is interesting nevertheless. Do you think because of BlackRock and Co, we might not go so to a long-term holder realized price? I think BlackRock and Co does not have enough impact, right? As we already said. Let's see if I find the chart here. Yeah, this is the long-term holder supply change, and this is the ETF. supply chain, the ETF supply chain really has very little impact relative to the long-term holder supply chain. Really, the long-term holders say everything about Bitcoin's future price development. Okay. Wow, we are above 3 hours. I will have to stop this at some point. I will drive my son to school. I have so with all of this work, etc., right, I indulged a little bit and bought a sports car. My son is now 9 years old. He's super happy about that. And so I always drive him to school. So with that sports car, it's now 6:30. I'll start driving him in half an hour. I'll prepare a little bit for that. Sorry for the last few comments that I couldn't answer. I will try to pick 1 or 2 more, and then we will call it a day. And of course, again, a like would be very much appreciated. I will also try to get somebody clip some content here. Okay, Japan's bond markets volatility. Yeah, I'm not deep enough actually in Japan's bond markets TradFi data, but this could be another potential black swan. Yes, might make sense to learn more about this. Thanks for the comment. Have you ever invested in a tech startup, started your own? Yeah, mainly, yeah, I started my own tech startups. Yeah, it's a topic for another day, maybe for another head talking video. Yeah, let me talk about my startup experience. It's a bit off topic, but I like these one-on-one talks. I have worked for tech startups and I've founded tech startups. And tell a few things about this as well. And I have a technical background, so I was always a tech guy in those roles. What factors are causing the market to drop? More supply than demand. The supply coming from long-term holders, the demand not currently being existent, except for some institutions, except for ETFs and treasury companies. But yeah, the supply of long-term holders is just too strong. And that could change, of course, if Bitcoin is low enough, and then people get interested in the potential upside again. When there is an AI bubble burst, will this affect crypto and gold? It will affect mainly crypto, gold, not so much. Except when the crash is very violent, right? When we get a real liquidity crunch, then of course it will also short-term impact gold. But usually gold is negatively correlated. Gold tends to go up during times of crisis. Comment on Hype Search, fake. Just watch the recent video. Published. The newest video on the channel is on Hype. Supply squeeze in Bitcoin, can't imagine. No, I don't think there is a supply squeeze. It will also not happen anytime soon. The long-term holders still own most of Bitcoin. And so that's not going to change anytime soon. And when they take profit, they will take profit. And that makes supply liquid again. So for high enough of a price, there's always going to be Bitcoin available. Where are you getting the long-term realized price? That's on checkonchain.com. So you see this here in the background, check on chain. Let me go to the main page. There are a lot of super useful charts here. Checkonchain.com. He's also got a premium. I didn't really like the premium, but maybe he's going to improve this in the future. But there is here, when you click on charts, there is this huge amount of very useful charts. Some of them are not that useful, but some of them are really good. And if you've got time, feel free to go through them. I very often discuss some interesting, useful charts from that website. He's a Porsche guy, I think. Yeah, I have a Porsche and a Gallardo. So just to clear that up. Okay, so that's it for today. Thank you so much for watching. Again, if you haven't yet subscribed, feel free to do so. I publish videos regularly, and I'm not sure if I can do those live streams regularly. I will try. And yeah, all the best. Stay safe, and see you next time. Cheers.